Hello. Hello, traders. Welcome to another stream. Let's see how many people do we have. So around 11 on the TraderNick channel. So there's probably a bit less people because we have moved the stream for Wednesday and Thursday a bit later. James was not able to join, but James should be joining today as usual. So the stream is back to the usual schedule. You can, of course, find all of the updates on the A1 live stream schedule. So here we update everything in real time and it syncs to your local time. Today I'm first, then you have James, then you have Alan, then it's going to be Nick and Chris, Alan and me, and Tiger will wrap up the show. That's kind of the usual schedule, the usual guest appearance. So if you have any questions, any chart requests, anything you want me to look at specifically, do make sure you put it in the comment section. And I'll do a brief kind of intro, brief overview of the markets. Today is Friday. People are probably preparing for the weekend. It is August as well. August tends to be a month with a bit of lower volatility, lower activity, less people participating, more people on vacation. So this is normal to see. This kind of move, let's say, Forex not doing much. My Swiss yen is starting to trickle lower a little bit, but not really moving a lot. Gold did have a pullback. You can see just there's not a lot of movement this week. Let me see the dollar, the DXY. DXY moving or losing value on the day. Yeah, the biggest edge, just for me to give you the biggest takeaway, the biggest edge right now is in stocks. So the most money, the most capital, the most volatility is now in the stock market, which means you can make the most money if you're trading the stock market. In 2025, you could make the most money if you were trading the gold market. Before that, Bitcoin was super active. In 2024, Bitcoin was the thing to trade because it had a massive push to the upside. The thinking is, the more volatility, the more money, the bigger the trend on a specific asset, the more mistakes will be made, and the bigger will the opportunity be for professional traders to make money, okay? Just a second. I wanted to go through some breaking news. I'm sorry about my voice and my throat. Usually by the end of the week, I've talked so much that my throat is gone. So, so I have to always keep drinking water and doing the... Let's see. I usually focus on the stuff that's in the red. So I don't think there's going to be much, but let's just run through the list. The yen is actually doing pretty well. The currency strength chart is actually pretty bullish on the yen. What's going on there? That is good to see. So JXY, the JXY is not moving much, but the yen seems to be gaining value. Like my Swiss yen is starting to trickle lower. The basic bet is that you will get a long-term strong trend on the Japanese yen because of the Japanese government. So essentially, you already got an intervention. You got a hawkish Bank of Japan, which they signaled possible rate hikes on the next meeting, or not on the next meeting, but in the future. It was hawkish. You got the GPIF pension funds, and you got Scott Bessent. So basically, you're getting a joint effort to push the yen to the upside. Now, the US is participating as well, and the reason why the US would want to do that is because Japan is a big holder of the US treasuries. So to avoid having Japan sell a bunch of US treasuries and hurt the United States, they are doing a joint effort to try and push the yen to the upside without hurting the treasuries. Okay? If you backtest joint efforts by the US and Japan, you will notice that they tend to be even more powerful compared to when it's just the Bank of Japan doing the bidding. Okay? So this joint effort should be pretty powerful to push the yen to the upside. The pension fund thing, the GPIF, is basically, you cannot hear the voice. If you guys have trouble hearing my voice, please put it in the comments, because I'm having the same setup as usual. The mic is connected. Let me see. Yeah, the sensitivity should be fine. Everything is fine. Okay, great. So looks like everything is fine as usual. Thank you. Thank you. So a joint effort to push the yen to the upside, that can last for weeks, especially the pension funds selling foreign assets and buying domestic assets. That can last for a really long time. So I'm holding my Swiss yen short. I closed 60% of this trade. I'm letting the rest run. So I'm letting 30% run. And I've trailed the stop loss to 198.055. So maybe in the upcoming few weeks, we can get the price to start and trickle a bit lower. That is something that I would like to see. I'm not looking to add. I'm not looking to go heavy long on the yen. I just think Forex is a bit dead at the moment, so it doesn't make sense to deploy a lot of capital to that. But I'm going to keep on holding this position. And now just give me 1 second to go grab a glass of water, and I'll be back. We're back. We are back. What I want to say, I wanted to scroll through the breaking news. So that's interesting that the yen is catching a bid today. China to reduce gasoline prices. That doesn't really concern us much. Financial juice, a bit slow today. Doesn't really want to update what's happening there. I'm not sure. The last market moving news was probably yesterday. Yemen's Houthi run news agency group targeted Aramco refinery. That was yesterday at 5 p.m. my time. It wasn't really something that was super market moving. It moved oil up. It moved oil up, but not by much. Let's see if this has updated. No, still okay. It's starting to load a bit. BOJ set to hike rates as soon as September. We got some BOJ news. Interesting. That's pretty important right there. So if they actually hike, that would kind of be bullish for the yen, because before they were so slow in hiking rates. Yes, they were hiking rates, but they were so slow at hiking rates that the market didn't take them seriously. So BOJ interest rate trading economics. The market didn't take this as a serious thing. But if they go ahead and hike a bit more and do back-to-back hikes, meaning hike in September and then hike on the next meeting as well, it kind of sets a precedent, and it tells the market the Bank of Japan is serious. We're going to bring the rate above the neutral rate, and we're going to try and tame inflation by pushing up the interest rate. Okay? So that was probably the reason why the yen is catching a bid today. Most likely. I don't know what's up with financial juice for today, but it's not loading as fast as it was before. We have some Vance stuff. I'm ignoring the Middle East, by the way. Trump orders the Navy to restore old tech. Saw that, but it doesn't really mean anything for the markets, at least. Let's see. I'm just trying to scroll to 7 a.m. yesterday. So today is August 14th, and I want to scroll to August 13th, like 7 in the morning. Yeah, nothing. This is going too slow. We got the PPI. Yeah, by the way, just inflation. If you look at the news calendar, we got the CPI print. We got the PPI print as well. So the CPI came in cooler than the previous number, a little bit cooler. The PPI came in a lot cooler, I would say. So if we go to the Edge Finder, and we look at the year-on-year prints, inflation, CPI. So cooler print than before. Not by much, but still a cooler print. PPI, same thing. Actually much cooler. So PPI from 5.5 to 4.7, that's pretty low. And the forecast was 4.9. That's pretty low. So I would say the rate hike for September for the Fed is pretty much off the table. If we go to the Fed watch tool, this one. Yeah, pretty much a hold, 69.4% chance of a hold. Although like trading this was not super, would not yield massive results. If you bought the Aussie dollar, so if you bought the Aussie dollar before the CPI, somewhere here, you would basically be up a very small amount, like 0.15%. So a repricing has happened, and it's a pretty significant reprice, I would say, because it was 50-50 before the CPI. But the movement in the market wasn't really so substantial, which is kind of strange. That's kind of strange. It maybe just goes to show that the volatility in Forex right now is pretty low, that there's not a lot of opportunity, and that the money is mostly asleep because it's August, but the money that is alive is probably in stocks. So in the SPY, in the Qs, and in software. Which one is the software? Yeah, this one, IGV, that's the software ETF. And the energy ETF, what is that? Oil and gas. So XOP. Let's move it up a bit here. XOP seems to be one of the leaders right now. So from what I got from doing the research and following a couple of really good traders, really good stock traders on X, software and oil and gas is the thing that is pushing the current move to the upside in stocks. By the way, you can also get the software, the sector scan on the stock box. So if you look at the stock box, and if you go to top sectors, this actually gives you a cumulative read on which sector is performing the best at the moment. So you have the trend, put to call, valuation, eco growth, inflation, and the jobs market. Oil and gas, that's the one I really like, and software. And guess what? Both are pretty high up. So 15 is the score, 10 is the score for software. That's kind of, I'm looking for the best performers in XOP and the best performers in IGV. I already have a couple of trades in, but I'm looking to do more. I have RHI, which has actually had a really nice move to the upside. VLO, which really good move as well. CoreWeave. At one point, CoreWeave was massively up. This is an episodic pivot. Trade If you know about Kulamagi and if you read the latest Market Wizards, you would know about this. But then full retrace, really ugly stuff, really ugly candle. So a bit unfortunate. And I have Dell, which I don't know. It's pretty close to the stop loss. Probably won't work out that well. So that's what I'm focusing on as far as the sectors go. I do want to mention, if you want to get the stock box, or if you want to get the Edge Finder, or if you want to join the A1 Trading Discord, you can get 15% off with the code Marco. So code Marco. All of the links are in the description of the live stream, or you can just go to the A1 Trading website. So stock box, Edge Finder, A1 Trading Discord. You can join or get any of these with this code and get 15% off. Also, you can join the A1 Trading Discord for free. So I'll post the link in the comments right now if you want to join for free. Give me 1 second. Stream links. Whoop. Free Discord. Okay, so in the comments, you'll find the link to join the free Discord, or you can scan the QR code on the screen, or you can find everything, all of the links, all of the information in the description of the video. Hey, Marco, are you using IBKR for stocks and options? And if so, are you satisfied with them? That's a good question. And yes, I'm in Europe, so I have to use interactive brokers. I don't think there's a better option if you're in Europe. In the US, there's probably a couple of options and a couple of better ones, but interactive brokers is like the best when it comes to trading in anything that you can as a European citizen, and having good conditions, good commissions, good spreads, and a generally pretty good experience. So personally, I'm really happy with them. Their software sucks. So like the desktop app sucks ass. MetaTrader is much better, I have to admit. MetaTrader is so much more simple and easier to type in, and especially on the phone. But you cannot get a better selection of assets like futures, options, CFDs. Yes, you can do CFDs. Stocks. They have pretty much every single stock that you can think of, and they have a CFD option for that CFD, like option to trade for that stock. So yes, interactive brokers. I've fully switched to interactive. I was with IC Markets before, but they were limited in their selection of stocks. Interactive brokers has everything, and I'm pretty happy. The conditions are pretty good, especially like the commissions. If you have a small account like 10K, the commissions are going to be worse than on IC Markets. But if you have a 50K or 100K account, the commissions will be much better than on any other retail broker, I would say. So let's go through the comments a bit more. Let me see what we have. What do you think about NU and AU? I like what I'm seeing on the 10-year, despite the XY. The bond market has moved a bit. Actually moved quite a lot. Pretty strange. Maybe not the long end. The long end is the 20-year, or I think there's a 30-year as well. But the short end definitely moved down, had a significant move lower on Thursday. So that was interesting to see. And maybe the dollar is catching up to that, because today the move on the dollar was pretty muted, and then it's maybe catching up to the 2-year yield, because the 2-year sold off heavily, or has been selling off heavily this week, I would say. This is good. This is good for stocks and for the general situation in the United States. You want the yield to go down because the price of the bonds then goes up. It's a signal, I would say it's a signal of a healthy economy. When people like the US bond and when the yield is going down. So that's some good news, and it makes me go risk on. The long end is still not reacting much, but the short end is a good start. I'm looking for longs on gold as well. So if we focus on gold a bit, it has started to pull back. It hasn't hit my 4,300 level. I'm looking to get in around the 200 EMA. I probably won't get in this week or today because it's Friday. usually don't like opening positions, new positions on a Friday, unless I have a really high conviction level. So for gold, I would prefer to wait for Monday and then maybe get in around the 200 EMA. Could we go a bit lower? Yes. But then buying below the 200 EMA doesn't really make a lot of sense to me. So gold is also bullish on the edge finder, which is a great bonus. If you look at the top setups, gold, very bullish, pretty nice. So I'm keeping the alert in and seeing what happens. Again, Monday, Tuesday, we may get an entry here. It makes sense for my dovish Fed thesis. It makes sense for the weaker dollar thesis. So it's pretty good. Do you use any CFD brokers? Yes, so Interactive Brokers does have CFDs. And I use CFDs to trade Forex plus stocks as well, because it gives you a bit more leverage. Did you make an entry? No, haven't made an entry yet. Sluggy says I took an AUD USD long yesterday. I think that makes sense. I think that makes sense. 0.70545, so somewhere here. I think it makes sense, although the Forex market is a bit dead at the moment. The volatility is super low, so I'm not super keen on just going in and buying Aussie dollar. I would rather wait for September when we get another NFP, another CPI print before the Fed, and we get the Fed meeting as well. So I think volatility kicks back in September. Until then, I'll most likely be focusing on buying gold, buying a deeper pullback on gold, and stocks. So stocks. If you're wondering about my stock trading, which I think right now, like, the best thing to do is to trade stocks. That's where the volatility is. That's where the edge is. That's where the capital is going. That's where the mistakes are made. So by newbies, by retail. So then we can come in and we can scoop up the extra edge. I'm doing a simple breakout strategy, a pole and a flag, and then a breakout or an episodic pivot. So RHI, this is a simple pole, flag, breakout. VLO, simple pole, flag, breakout. Core weave is an episodic pivot. So you get a gap up of 10 to 15%. The fundamental reason for the gap up needs to be solid. In this case, it is that some of the GPUs that they thought were going to last for 6 years will now last for 9 years minimum, and then maybe even more. So that means they can use old devices to create even more revenue. That's pretty bullish for core weave. That's why I bought it. Stop is just below 100, and we'll see what happens here. The last candle is super ugly, so I don't have my hopes up, because this candle is a massive rejection. I did buy Dell as well. Simple breakout. You have a flag and you have a pole. So you have a pole and you have a flag, and then you get the breakout. So I'm in 4 positions at the moment. Sluggy says, Marco, for stocks, what do you think about SK Hynix? SK, what's the ticker on that? Okay, so I don't know much about this company. I have heard about them like on Twitter and from some of the traders that I follow. But plus, let me know if this is the right ticker. I think it should be. So I really don't know. I don't know. I'm going to have to do some work on this, some research on this. The price action, I don't have enough data. There's no pole, there's no flag, there's no breakout, there's no 50 EMA, there's no 200 EMA, there's only the 20 and the 10. So for my personal entry strategy, there's not enough information here. Maybe there's a different chart that has more info, more historical data, but this one doesn't tell me anything. So if I just rearrange my watch list here, let's see, I have like the ready list and I have the not yet list. Essentially, the ready list should be stocks that are close to breaking out. This one is not. LLY is a good example. Let's just delete this. I already took a loss here right before the big explosion up. That was kind of painful. So this would be a great example. LLY. you get the pole, you get the flag. It's consolidating. It's building pressure. It's very close to breaking out. Okay, and then if you do get a breakout, you execute. That's what I'm looking for here. Or what I saw some more advanced traders do, which is something I'm not doing at the moment, is they wait for a fake out like this, and then they buy the fake out. So a lot of retail gets, me included probably, will get stopped out if you get a fake out. And then there's traders buying the fake out. I know they did something similar on Dell. Where's Dell? So you get a fake out here, for example, 5th of August, fake out, and there's some people buying the fake out. Also HPE. HPE was another example. So you get a fake out. I actually took a loss here, so I was with the retail. Bought the breakout. It was a fake out, and then you get some professional traders buying these lows, right? And those guys probably are making bank at the moment. So let's just rearrange this. LLY is close to breaking out. GEO, no, not yet. Etsy, not yet. No, no, no. FTNT could be. It's starting to approach the breakout zone. KMX, yes, as well. This one, yeah, kind of close. Okta, yes, absolutely. GH, no, not yet. Comp, what is Comp? Compass, what is this? Finance, real estate development. I don't know, not a great sector. I mean, it's a good sector, but it's not like a super hot sector. And this has already broken out. So I don't know if I want to get into this. Maybe. Doesn't look that bad. How did I miss this yesterday? Because I usually take trades on the open, and the open was not so bullish. So this one is actually going up. EXPE, no. I'm going to remove this. And W is just starting to surf the DMAs. So that's my watch list for stocks, and we'll see what happens. Marco, LLY is doing an acquisition of healthcare company, so pretty bullish. Also got some FDA approval. Yeah, they're doing like an Ozempic drug. Okay, so a weight loss drug, which right now is super hot. I know, like from my parents, all of their friends are using some form of Ozempic, and they're losing 10, 20 kilos by doing nothing. So it's pretty funny. And when I look at them, because I know them when they were super fat, and now when I see them, it's like a big shock because they lost 10, 20, maybe even more, maybe even 30 kilos just from doing Ozempic or a similar drug. So yeah, people in their 50s and 60s love this new drug, and all of the companies producing it, like LLY, are gonna do really well. It's kind of like AI, but for nutrition. So that's about it for my segment. I want to remind you, if you want to join the A1 Trading Discord, you can join for free by scanning the QR code on the screen or looking at the description of the stream. You have James coming on in 30 seconds. I'll play a quick transition. You can catch me again in 2 hours during my second segment. And yeah, good luck. Let's get some more breakouts on stocks.
If you're looking to get funded and want to save big on prop firms, check out our website, a1trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by one-step and two-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday, we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare two firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content.
Hello. Can you hear me? Ladies and gentlemen, I am in one monitor today, so excuse the bit of a ghetto setup here. I just want to, again, make sure you can actually hear me because I'm using my AirPods, so it might sound a bit naff. So again, I apologize, but I'm doing the best I can while I'm traveling. You've got what you've got. You've got me for the next hour. Hopefully it's okay. I've got the YouTube chat here, so I'm just going to watch this and we'll use this one because I don't want to have to keep going back and forth and showing you guys the same screen that we're in and all that. You can hear me? Okay, good stuff. Ray Beast, good to see you, my friend. Hope you're doing well. Sluggy, hello. 2288, good to see you, my friend. My screen is good, phenomenal. Love to hear that. So it's Friday, my dudes. I'll be honest, I've been away from the markets for 2-3 days, give or take. So I honestly have no idea what's going on. So I'm going to kind of try and catch myself up with you. If I've missed anything, let me know. If there's anything eventful going on. I did have a brief check in the backstage. It does seem like we're not really getting much in terms of the Middle East situation. I think there was a tanker that was struck by a drone, something like that, but it doesn't seem like I've really missed anything other than some market movements. Nice background. Thank you very much. Hello from the beach. Oh, Christoph, you're at a beach. Very nice. Looking fancy. Model is also going long on gold with Quarter Kelly, so perfect position sizing. I don't know what Quarter Kelly is, but very nice, Ray Beast. If you're making some money, that's what I like to hear. So let's take a look at the Edge Finder. What I did notice, again, I was having a very brief catch up, and all I really noticed very quickly, again, was the US dollar has seen some inflows on the previous release. Obviously, this was now 7 days ago, so it's a little bit outdated, but so am I. So we'll try and work backwards a little bit here. So, excuse me, the dollar doesn't seem to be doing anything positive, to be fair, for the bulls here. So there was still a little bit of an argument, of this left side being, break, retest. Well, retest here. Doesn't seem like that's coming to any sort of success. We've actually sort of broken lower, had a little bit of a consolidation, retesting this area. It does seem like we are heading lower. I'm fairly sure we had some negative news come out. Was it yesterday? I saw a headline come through, but I honestly don't know what it was. So let me just take a quick look at the heat maps. Again, I do apologize. I'm not being overly active in the markets the past couple of days, so I've just got to. So what date is it today? It's the 14th. Yesterday we had jobless claims come out at 209K, up from 202. Not good. What else do we have here? Nothing's changed, actually. We did have CPI that came out. I was watching CPI about the plane, so I'm aware of what happened there. CPI came out 3.4, PPI 3.7. Yeah, so let's actually take a quick look at what CME FedWatch tool is doing. Yeah, again, not a great sign for the bulls on the dollar, actually. We're seeing the markets pricing out the expectation or the probability of a rate hike by the Fed. So if you guys remember back in June, early July, we were looking at the CME FedWatch tool, and it was very heavily swayed towards a rate hike by the end of the year. Obviously, on the back of the worst data we've had out of the US here, that probability of the rate hike is getting diminished quite significantly, actually. So we can see here a month ago it was at 50%, gone down to 44, then it went down to 33.9, basically 34, and now it's down 50%. It does seem like we are still expecting a rate hike in 2027, though. So we'll have to see how it plays out. I'm still not convinced on really any positive developments regarding the Middle East. So I do still sit slightly more bullish on the US dollar, but not enough to really sway any positions. What's going on here? There might be a good final chance to buy gold at the next daily cycle low, which might consolidate with OPEX late August before rally going starts as usual. Yeah, so I am still in gold. I've got my entries around 4,000, so I'm sitting quite nicely in these two positions. But as I've been saying, over the past couple of weeks, these are really small positions. So in a way, I'm suffering from success here. I got two great entries, but they're too small to really mean that much. It's a little bit unfortunate. Of course, I'm looking here for, I suppose right now it would be a 61.8% retracement, because this would, we've had the break here, so it would allow the retest sort of pattern, excuse me, into these previous highs, and then look for a continuation up back towards around 5,000. So we'll see if we get something like that. But to be honest, I'm not overly optimistic. We've had multiple opportunities here really to have a reasonable pullback, so I'm not going to bank on it really. BPI also dropped a little bit. Yeah, pricing hike is illegal at this point. Yeah, excuse me. I don't think the dollar's really got much legs, to be honest with you. I think we've got the Middle East situation, so we've got a bit of war premium. I'm fairly sure the yields are still quite elevated on the dollar as well. For some reason, they're not loading here. But why? Are they not here? Well, yeah, I mean, we've still got elevated yields, so the dollar has a little bit of support. But again, the idea that the market's pricing out rate hikes, we've got weaker US data as well. It's really not looking good for the dollar. I think the best, I would, in my personal opinion, not financial advice, would be leading on the short side. But yeah, again, I'm not really willing to put much money on the dollar at this time. Christoph, what are you saying? Short dollar Swiss after an H4 fib rejection, bearish edge find. Any thoughts? Interesting. Let's take a look. So dollar Swiss, what is the edge finder saying? Okay, so, the dollar is finally getting this bearish reading, actually. I know, I think earlier this week or last week, Sluggy and I were talking about the US dollar on the edge finder. It was a little bit odd that it wasn't actually getting the bearish reading, even though it was sat around 30%. But it is now getting a bearish reading, which is nice. So yeah, dollar Swiss bearish, -6, and we've also got dollar CAD sitting bearish with -4. So we do clearly have that bearish dollar sentiment. The H4, I suppose technically speaking, this looks okay. The only downside for me here is this bullish trend that we're in. So we've obviously got the 200 moving average above the 50. Again, technically, that is a bullish trend for the way I define it. But so that doesn't really mean much. If we are seeing rejections and we're seeing some bearish sentiment on the edge finder, meaning obviously fundamental. We've also still got the daily that's crossed bullish as well. So I'll be honest, the technicals are very mixed. And I think just having looked at it, this daily level here is quite a big thing. So we've got obviously previous daily highs through here, and it seems we're failing to break back below. So if you are short, obviously the big thing you would really need to watch here is how price reacts on this level. Either we're obviously going to get some sort of continuation, we've got the bullish trend. This could be, break and retest type pattern to continue higher. Technically speaking, that does seem like the most obvious direction. But again, if we account for the fundamentals, the current situation within the dollar, maybe something a bit more like this would make sense, where we break lower, retest this level, maybe retest the 200, something along these lines, and then again that continuation lower from there. So I like the idea of being short. Again, for me, it just seems a little bit premature. But if you're a bit more happy to take the risk and expectation of obviously again the break lower, I think it's fine. Also, there might be a little bit of a delay. Normally, the back end, so on StreamYard, where I normally read the chat, I think that's more real time. So, you get my responses a bit quicker. So I'm using the YouTube chat, so I think there's more delay. So I apologize. I'm working with what I've got here. 70% sure of gold retracement. That's very specific. Why is it 70%? I like gold, but be careful with pins and leverage. Yeah, of course. Morning, James. GBP/USD heading to take out. Yes, I did actually see the pound dollar doing quite well this morning. Where is it? Yeah, so we are breaking out of this pattern. So this is something I was looking at over, I'd say the past 2 weeks, give or take, is these, lower highs that were forming, and it's very clear downtrend. As I always say, I don't trade trend lines, but when they're really obvious like this, I will draw them up. So the fact we're now breaking this level, and actually we've got kind of what I was talking about, which is the retest of the trend line, and actually it lines up with these previous highs. So in hindsight, I probably should have been in here because it is what I was looking at. So broken out previous highs, kind of created a new high here relative to these highs, obviously not the one over here, retested into the trend line, into the previous highs, and also the 50 moving average. So I would say the technical setup here was probably quite nice, actually. Let's just see, does the fib work? Oh, the fib works perfectly. So if we take the, oops, what's happened here? There we go. So if we take the previous H4 low to where the high was, and obviously we draw the fib measure in this bullish leg, we've got a perfect fib retracement into these highs. So actually, I'm a little bit annoyed about that. I probably should have been in this trade, but whatever. So from this point, I would say the next big thing actually is, do we break higher? So obviously, we've kind of double topped in this area. It does look like we've got some nice buying pressure coming in. So from a bull's perspective, we'd need to see a new high get printed, take out these previous highs on the left, then a retest into this level, and then a continuation higher. I think that's base case at the moment. So fib from this low to a new high, let's say around 1.36, just using round numbers. And that means the fib would line up with this, again, this previous level of structure on the left. So this is what I'm going to look for. Whether we get this or not, obviously, is a different story. But that's the only setup on pound dollar I can really see at this time. Pound dollar still gets a very bullish reading of 7, which is nice. So we've got really all the confluences there. We've got the technicals, we've got the edge finder. Everything's looking good. What else do we have? James, I took Australian dollar, US dollar longs yesterday. Yeah, I'm in Aussie US dollar as well, actually. I completely forgot to mark it up because it wasn't my trade. I am in it, but it was a trade by one of my traders, Elite Traders. But yeah, we got in here. So actually, we're in a very nice position. I kind of didn't realize, again, I've been kind of on and off the charts quite a bit recently. But yeah, Aussie US dollar doing quite well. I think the Australian dollar is quite well supported at the moment. So I'm also looking at Aussie New Zealand dollar long, which we can go over in a minute. I see mispricing within the dollar. Sluggy, I don't necessarily disagree with that. I do think the dollar likely has further downside to come. But again, I do think it's been supported quite heavily off the yields at the moment. All put long, sell the house and kidney. What, on gold or the dollar? Yeah, I agree, Sluggy. I think, the only thing keeping the dollar up is the geopolitical landscape. For the dollar, oil and gold, Chinese macro data, I'd say, is more important than US data. It's an interesting point. I wouldn't say, I would say for the dollar, the US data is more important, but Chinese data is still, yes, very important especially when it comes to industrial metals, copper, silver, quite heavily driven off the Chinese market as well. Pound CAD long. Yeah, pound CAD's not doing great, actually. Again, as I said, multiple times, been on and off, so I've not been able to monitor this trade perfectly, but it's seeming not fantastic at the moment. So is it still on the edge finder is the big question. It is still on the edge finder, and actually the score is equal to where it was when I last checked, which is 5. However, it seems like it was at 1.6. Obviously, you can see we've lost 1 point over the past 1 day or 24 hours. So I'm still willing to give it time. Again, the fundamentals are still there. The daily trend is still bullish. So there is no reason for me to get out yet. And what we are also seeing actually is a retest into these highs on the left. So there is a possibility, there's a possibility, albeit very small, that we could actually run higher from here. We've had, again, sort of double bottoming around here, retesting previous structure. Daily's bullish, edge finder's bullish. So I'm not ready to give up on it yet. But as I said, it's looking quite bleak. James, GPNZD is at a 50% retracement for a long, and the edge finder has a bullish reading. Does it? It does have a bullish reading. It's 7. Interesting. Let's see. Where are we? Where is it? Oh, New Zealand here. I see it, but I don't like it. So the H4 here, still in a downtrend, technically speaking. Now, I suppose so H4 is in a downtrend. The daily seems quite range bound here. You know, we're not really seeing any directional movement. We came out to this bullish trend here. Since that point, we've kind of just been sideways. We can see that on the moving averages, they're just side by side. There's no trend here. You know, we created a new high, but then we came down. I suppose you could make the argument this is a higher low from the previous low, but I would say this is still kind of just range bound. I wouldn't really consider this a bullish trend just yet. The H4, again, does seem like it's in this bearish trend, but there is a potential or a possibility here that we actually reverse from this point. It does look like we're in a bit of an inflection point or heading into an inflection point on the moving averages. The fib kind of lines up with previous highs on the left, you know, within this area. So that will provide the break retest. So I do see it, but I would want to just see a rejection off the, I'd want to see a rejection off the fib here just to give me a bit more of a confirmation. I think this is quite an aggressive play. Technically, again, the fundamentals there on the edge finder, but yeah, it just seems a little bit loosey-goosey for me. China reduced their oil imports by like 45%, which caused massive demand destruction. EBOC liquidity with gold is very correlated. Interesting. I don't pay that much attention to China. I should, but I just don't. But yeah, China, I genuinely don't have an opinion because I just don't keep up with them enough. But again, I probably should do. Shanghai price is flying. I've been avoiding CAD for a while now. So have I. I've been avoiding the Canadian dollar just because of the exposure that would give me to the headlines and oil. It's not something I want to be that involved with. India and China has been main drivers of gold. India raised their gold tax from 7% to 15% to protect every beat. Yeah, I mean, again, last thing I heard with China and gold was that they massively increased the margins. Someone also said they banned retail trading gold. I'm not sure how true that was because I didn't verify. But again, it does seem like basically what China's trying to do, from what I understand, is that they're basically removing the retail paper aspect of gold to try and find what the real value of the physical markets is, or the physical gold. So we'll see, but yeah, I mean, it doesn't really play a role in what I'm doing here. The edge finder is bullish on gold. The dollar does seem quite bearish again, despite the geopolitical landscape at the moment. The trend has changed bullish right here on the the daily has broken out of this downtrend. We've broken above the 200 daily moving average. So I'm still willing to be long on gold regardless of whatever is China. The band paper shorts, right, that's it then. Interesting. So, what are we looking at? So Eurodollar is still getting a bullish reading, but I am still short. So Eurodollar is not looking great for me. I've still held the position because I still kind of like it, to be honest with you, although it's not looking great right now. My exit criteria for this is a close and hold above this 200 daily moving average. So if today's daily candle closes above, I'm going to have to call it a day and just realize the loss, because I just don't want to keep sitting in this, because again, I do see really more of a potential for this market to continue higher again, especially if we do break above this 200 daily moving average. The play really was based not necessarily on the fundamentals, because the fundamentals are bullish. It was basically just placed on a historical landscape or a historical idea. So I've said this previously, but I was looking really for a continuation of this pattern we've seen on this weekly time frame, where we create these lower highs on this trend line, and then we continue down up towards parity. You know, we didn't quite reach it here, but we did head down significantly. We had a 15.25% move lower. This was almost a 23% move lower. So I was looking for a repeat of that. We've also got really bearish seasonality for Eurodollar as we head. I think it's, if I remember correctly, it's sort of the start of September through to mid-November. Historically, on the 5, 10, and 15-year seasonality, Eurodollar is, again, very bearish. So that might still play out, but my entry, I think, might just be a little bit too early. Thoughts on pound New Zealand. We did just look at pound New Zealand, my friend. It doesn't look great. So the fundamentals are there, but I think the technicals just need a little bit more development. So we go back, we can see the daily just looks a little bit range bound. We're just not really seeing much go on here. The H4 is still in this bearish trend, technically speaking, although the bullish idea would be, a little bit of a move lower into the fib, rejection off the fib. And the rejection for me in this case would be very important because I don't want to buy into this market without seeing some buyers stepping in first. And that would also not just be a pull into the fib, but also be a retest of these previous highs on the left. So I like the idea, but I just need to see a bit more confirmation before I'd be happy to jump in, really. So yeah, that's kind of my view at the moment. So what I was also looking at was the Aussie New Zealand for a long position, and it's actually coming into my area of interest. Now, this one's a bit of a tricky one because I am pretty confident that this market will go higher. I think retail loaded up quite heavily on shorts, and granted, I was looking to go short as well. I didn't do it, luckily, but I just don't think the short idea really is that valid. I don't see anything really that could warrant it. I think the Australian dollar is still quite strong. So let's have a look at what the edge finder is doing, because I checked it yesterday, I think, and it was actually getting a bullish score. I'm not sure if that's dropped now, though. It does seem like it has. Yeah, you can see here, yesterday it was getting this positive 4. But what we've got, economic growth is bullish, the jobs market bullish, the technical signal is bullish, and institutional position is bullish. Retail sentiment actually is bearish here. So it seems like the edge finder retail sentiment uses obviously a different provider than what I was looking at. So this obviously doesn't align with what I was looking at. Inflation data is bearish though. So a little bit of a mixed signal, but that doesn't really change much. I would still be quite happy to go in for a long position if we do see a rejection off this. It would be quite small size, but I just don't know if I'd really be happy going short just yet. So we'll see. This is very much just a maybe trade at the moment, but I see some potential maybe. So. Yo, James, looking at GP USD long, love the trade. Yeah, we looked at this one earlier in the stream. I also do quite like it. So as I was saying, what I'd be looking at here is a break out of these highs, a new high around this 1.36 area. And the reason I'd be looking for this is because then the fib would line up with the previous highs. So it would allow a trade that would break the highs, come into the fib high, and then retrace into the fib zone, retest the previous highs, still in this bullish trend, then a continuation higher. So that's my setup on pound dollar. Whether we get that, of course, is still up in the air, but that's my that's my criteria to be a buyer. Bullock playing 4D chess with us. We all know they don't want to hike. Yeah, I don't think hiking is in their best interest, but again, we'll have to see because it was largely priced in that we were going to get 1 to 2 hikes into 2027. Since that point, though, we've had a complete flip in data. We went from 100% bullish score on the edge finder for the dollar, and now it's sat, I don't know what it is right now, but I know it went down to 30. It might be even lower. Yeah, it's gone down to 20. So since July, the edge finder has lost 80% of its score for the dollar. So again, that sort of complete flip in data. We had sticky inflation. We had NFP that did, I think, quite well, if I remember correctly. So on growth was quite good as well. But again, since that point, we've had a complete degradation in all of it. So I don't really see anything that's going to warrant the Fed hiking rates. And at this point, I would say even if oil decides to skyrocket and inflation comes in higher, I don't think that's going to be enough. I think with the weaker labor data and weaker growth, it's going to put the Fed in quite a difficult position, potentially leading into stagflation, depending on how bad it actually gets. Would you generally exit a position with a partial loss if the edge fund does not support the trade idea anymore? Yeah, so if the only way I would really exit a position prematurely is, yes, if the edge finder loses a score and the technicals break. So with pound CAD, yeah, I would exit the trade. So let's say the edge finder flipped back to neutral and we ended up coming back, creating sort of new low ideas, and the momentum is quite heavy to the downside. I would just cut the trade. because at that point, it's actually more likely we're going to come down even lower, just stop us out. So there's no point in keeping the trade open at that. So in this case, the reason it's still open is because the edge finder is still bullish. As I showed you on the daily, excuse me, as I showed you on the daily, there is still an idea of retesting these, this sort of resistance level and continuing higher. So I think there's still optimism, but yeah, again, we'll just have to see how it goes. So I didn't ban paper shorts in gold. They stopped leverage in gold. That basically takes out retail traders in general. Most retail traders will require some sort of leverage. It's basically an equivalent. Australian dollar getting a bullish reading here. I didn't see that earlier, but again, that does reinforce actually what I was saying about the Australian dollar being quite strong. Pound yen, actually, let's have a look at the yen pairs. I'm still in dollar yen, so I've still got these two buy positions at 156.96 and another one here at 158. Sorry, 156.9, is that what I said? And then another one here at 158.234. Nothing's really changed. So my idea really with the yen pairs is that they're still good markets to be buyers of. So, there was a lot of fear, like there always is with interventions. It's like, oh, should we be selling dollar yen, pound yen? Should we be buying the yen? I don't really see any reason to be doing that. We've had no policy change. The only real downside, the only real downside is that the Fed might hold rates. I don't think cuts are on the table. But then if the Bank of Japan starts hiking, we will obviously see the yield gap start to close. And that makes the carry trade less attractive. I don't really think that's going to happen. If the Fed starts cutting rates and we do see the Bank of Japan hiking a little bit more aggressively than what the markets expect, then yes, I think the dollar yen specifically will be in some trouble. But again, I don't really see that. I think realistically, the Fed is going to hold. I think the Bank of Japan has room to hike, but I don't think it's going to be a case of the Bank of Japan can go to, let's call it like normal rates, 2-3%. I think that's going to be too much of a issue for the bond market. So realistically, yes, dollar yen might slow down, but I would still say it's a good carry trade and it will continue higher. But the issue is really this idea has been in the markets for a while. Oh, the Fed might cut, the Bank of Japan might hike. Nothing's changed. The Bank of Japan was at negative interest rates at one point and then hiked to 1%. Dollar yen still continued to climb. We did see that yield gap start to go smaller, but it didn't really do anything to the dollar yen, to be honest with you. We're still holding pound yen shorts from 219, but cashed in the 216 and 210. Do you mean, okay, so you're still short but took some profit? Is that what you mean? Like you took partials? I'm not 100% sure exactly what you mean by that. Let's take a look at pound yen specifically. Yeah, I'll be honest. It's just what I was saying. I don't think there's really any reason to be short. Again, unless you're expecting the Bank of Japan to aggressively hike rates. We are at a little bit of a resistance point here, I suppose. So you could maybe make some sort of argument, you're selling the resistance, but I just really don't see this being a great short position. I'll be completely honest. And of course, that's my opinion. You obviously have your own reasons to be short, so it doesn't mean you're wrong and I'm right. But just from what I understand of this market, not for me. And actually, again, the edge finder is bullish, so it lines up brilliantly. So we've still got the carry trade. The fundamentals are bullish. The trend on the daily is still bullish. We rejected this 200 daily moving average perfectly on pound yen and dollar yen, actually. So yeah, it just looks like a fantastic buy. I actually think we might have missed the buy position if you're not already in it. So maybe on some sort of retracement, be a good idea. Not financial advice, of course. Still open US dollar yen, 2.5%. Very nice, Christoph. Yeah, I'm still, like I said, I'm still in dollar yen. I put some small positions on, so they're not gigantic. And it was more just, I think I said it at the time, but there was always that risk of another intervention just to continue pushing the yen higher. I didn't see it as a likely thing, but of course the possibility was there. So my idea to counteract that was smaller positions, more of a ladder thing. So as the trade developed and improved, then I would add a bit more size on. So I've got the two positions on. So if we do, for some reason, get another intervention in between now and 164, I can either take profits and close the trade if I'm quick enough, or I'll take a very small loss. Oh, it's a gamble, already made a nice profit. Okay, that's fine. Obviously, you don't need my permission, of course, but I think that's the best way to go. 159 to 157 on UJ. I think it's going higher than that, to be honest, Anton. I think at least we're going back to 164. I think what we've seen with the MOF is defending sort of one level at a time. So, I think it went from, was it 150, 155, then it went to 160, and now it seems to be 164. Whether it's a case of it got into 164 and that was a case, we cannot have it really any higher. This is a real issue now. We're going to push it below 160 and then defend 160 again. Maybe. That could absolutely be a possibility. But even so, I don't think they can realistically do it. I mean, again, they were defending, I can't remember if it was 150 or 155. We then went to 160. They tried to defend 160, then went higher to 164. So even if they try to defend one level, eventually it's going to continue higher beyond that point. So it doesn't really change my view. I'm more than happy to just sit in long positions. They might intervene again. I hope they do. I can buy more. Have you invested a lot of money? I really like the website. Yes. So it wasn't, I'm not here to promote that, but it wasn't a lot of money to make. It's more than maintaining it costs a lot of money. So, it's just me. I don't have a team to pay for or anything like that. But obviously there's a lot of data, AI, all of that stuff. So the more people use it, even for free, every single user costs me money. So it's about $2,000 a month just to upkeep, and I don't make that back. The revenue is still in 3 figures. It's a loss, but I love it, so I'm happy with it. Anyway, we'll move on. Again, I'm not here to talk about that. Their intervention has failed already. Fund buddies didn't follow through. It doesn't matter. They would lose money because I think the whole point is it's just not worth going short. The whole thing with the yen pairs is you get paid to be a buyer. That has not, the regime is still there. There is no reason for hedge funds or anyone to go short. They would lose money. I mean, obviously, if they're all piled in shorts and the trend changed, then yes, they would make money on that. But I mean, the whole thing really with dollar yen is you buy it low and you just hold it, because it's not just a case of, it trends to the upside, we make money on the trend. There's also, again, it's that carry trade attraction. The whole thing is there's a specific strategy that institutions and big players use, because, when we sit in a position as retail traders, we, depending on the capital, you can still make good money on the swaps, but it's not really fun. It's good, but it's not a case of we can build a strategy around that specifically. When you're trading with hundreds of millions, even tens of millions, or maybe even more than that, you can build strategies around a carry trade. So your entire thing is actually just a swap, not necessarily the P&L. Of course, I'm simplifying this quite drastically, but what they do, generally speaking, is that they will buy dollar yen. They'll just sit on that position, and that's not just one idea. That's a whole strategy that's used as sort of a collective approach. So they're buying dollar yen on these dips again for the interest on it and the swaps. So it's not in their best interest to be selling dollar yen whilst the attraction is still there. Does that make sense? So we really need to see something structurally change. But it doesn't seem like that's really that likely at the moment, because again, as I've already explained quite a lot, the Bank of Japan it's not just a case of, we need to make the yen stronger, we've got to hike rates, because they've also got an issue with the bond market. And if they hike rates, the bond market's not going to be happy. But if they don't hike rates, the bond market's happy, but then the yen's unhappy. So it's like they've got these two real issues. They've got these two real issues, but they both require basically opposite fixes. So if they do one, the other one is really not in a good situation, obviously vice versa. So yeah, we'll see. Again, as I always say, I'm not as intelligent as these economists. I'm a trader, but I do my best to try and understand these pretty complex situations. So it might, it might go a lot more deep. They might have different approaches, different fixes that I just haven't even comprehended. So take it with a grain of salt. But this is just my thought process, my opinions, and what I've found my analysis. Percent used to work for Soros. Interesting. Oil is a catalyst. I don't know. I mean, interest rates. It's a very tricky one because it's not just a case of oil and the maths. It's also the average person that lives in Japan. It affects everyone when an interest rate is changed. So yeah, we'll see what happens. But again, as I said, I'm not as intelligent as these people. I'm just taking my best guess and my best opinions, really. But again, I could be completely wrong. So let's move forwards because we have some things to cover. We still got actually about 20 minutes, half an hour. New Zealand, as we've already discussed, is bullish. Aussie US dollar is bullish. We're already in that position. It seems like quite a few of us are in that. I think Marco is also long on Aussie US dollar. Sounds like some of you guys are long as well, so that's good. Silver's bullish. Silver could be a great one, actually. Let's see. I do really prefer to trade silver over gold. But at the time, gold just made a bit more sense on the technical side. But I think now we're starting to get a little bit of a trend change. And the fundamentals picking up. Silver could absolutely be the next play. So fib from the low to the high. Does this really line up with anything, though? A little bit. The problem is, it seems like we've already retested this level on this low. So really, the idea that I use, or the reasoning I use fib isn't just for the measured pullback, but it's also for the break and retest aspect. So I would want to see the break, which you've had, and then the retest. It seems like we've already had this retest here of these highs. So whether we'll still get this idea, I don't know. It could sort I'm sort of going into more of the micro analysis here, which isn't something I typically like to do. But we'll see. And also the idea here that we picked up on this 50 moving average, it tells me that we might not get this 50% pullback, and that might actually be the most we're going to get. So it could be more of this idea. Now, this is a bit more aggressive because the fib is really small. Then a stop loss at the low, we would allow here the moving average, the Fibonacci to act as a support. We've got the high here that could also act as a bit of a support. We've also got the moving averages that could also act as support. The price came lower. We've got a few different things that can come into play and sort of pick it back up again potentially. So I don't mind it, but again, it is quite aggressive. So there is maybe something like this. So we'll see. Maybe I'll get into this because, again, I'm already long on gold, but with very small positions. So I would like a little bit more exposure to the metals on a shorter term horizon with a bit more size. So this could play out quite well, or it could be a little bit of a, again, an addition to the metals exposure. You've been doing this for a very long time. Fair enough, Mega. The thing is, it's not just a case, as I said, it's not a case really of will the Bank of Japan hike. I'm fairly sure they will, but we've also then got to think about how much can they hike back. So my whole argument isn't that the Bank of Japan cannot hike rates at all. I don't think they're frozen at the current rate, but really it's a case of, again, how far can they hike, by how much, but also who else is hiking. So I think what we have to avoid thinking is, the Bank of Japan is going to hike rates. That means dollar yen's going to come lower, or pound yen, or whatever it is you're looking at. Because yes, the Bank of Japan could hike rates, I don't know, let's say 1.5%, but then are other central banks also hiking? So it's not a case of this yield gap is getting smaller. It's actually staying the same, or potentially even wider, as we see other central banks hiking as well. So we'll see. But I think, again, there's a lot of other things to pay attention to. And again, Mega, I'm not saying you're wrong by any means. Again, this is all my thought process. My view on Nasdaq, yeah, we can take a look on Nasdaq. AACG down 13%. I don't even know what that is. I'm not a stock guy, but we can take a look if you want. We give you technical side on stocks, but not much really beyond that. Maybe I should get the stock box so I can take a bit more of a deeper look at these. But again, I don't really know that much. You short gold from 4435 spot. Okay. Yeah, as I said, I think the base case for me at the moment on gold is high. I do think it's still bullish, but there are definitely things that could come out to sway that. So again, if we get these escalations in the Middle East and oil starts pumping higher, that's going to be a bit of a detriment for gold. If the US dollar starts coming out better, it's going to be a bit of a detriment. So I don't think we're really out of the woods yet. I think there are still these little, question marks or these little red flags that could definitely start raising. Okay, so Nasdaq, it's definitely an interesting one. So already we've got no reading for the Nasdaq. So I'm going into this with no bias because this is what the Edge Finder is good for. If you don't have the Edge Finder, use code ELITE for a discount. It does help me out. I get a bit of a kickback. So it's a win-win. You get a discount. I get a bit of money from that. So win-win for you and me. But yeah, already no direction here. So there's no bullish readings, no bearish readings. So I'm going in flat with no bias. So what do we have on the technical? Very, very nice recovery. Actually, a perfect recovery. It's a really good V-shape reversal here. So really, yeah, it's actually quite tricky. Let me just remove the drawings. So although we do have this V-shaped recovery, the problem is that we're still stuck sideways. It's not really like we've cleared out any significant highs. We've not printed anything that is really meaningful whatsoever. So for me to get interested, I think I need to see these highs get cleared out on the left. So something like this, new all-time high, and then a retest into these highs, and then I could get in on this retest and continuation high from that point. For some reason, my drawing doesn't go any further left. I don't know why that's happening, or higher. I don't know what's going on here. Anyway, excuse me. Anyway, this is a very tricky market. So I think being a buyer by default is the way to go. I wouldn't say going short is a very good move at the moment. But it's more a case at the moment of, how do we actually get into this? Because there's no entry. We have had the moving averages flip. So bullish trend, obviously. Yeah, there is just no technical setup at the moment for me. Again, I need to see these highs get cleared out, new high, retest into the highs or previous highs at that point, and continuation to the upside. My Coke's gone warm. Gross. I'll have to get another one in a minute. Wash, Drunken Miller, and Vicent all used to work for Soros. They know the 1992 playbook. Yeah, I mean, I would love to see some sort of massive market crash, 30, 40, 50%. Obviously, short term, that would be massively painful. I've got investments in the S&P and things. It wouldn't be great. But the benefit for that specifically is that as active traders, yes, we might lose money on our long-term investments, but we can make a lot more money back by shorting it on, CFDs or futures, whatever it is you trade. So that is the good side. Of course, outside of the trading world, it'd be horrible. People will lose jobs, businesses shut down. It's not good. People lose retirement funds. But again, on a more capitalistic, selfish way, it would be amazing. Then, we can obviously invest drops, we can short the markets, we can get really involved and make some serious money on that. Whether it's going to happen, of course, is a really, really different question. Because one of the things I've been playing off really was the idea that I think AI is massively over. The optimism around it is really overdone. I think valuations are very high, but actually something I found was that they're not that high relative to something like the 2000 bubble. They were, I think they're like 50x at that point, and I think we're currently around 20. That could be completely wrong, but I think those are the numbers just for more comparison. So yeah, I don't know really if we're actually heading for a crash imminently, but that's not something I've been saying. My whole idea was over the next couple of years. But we'll see. So it's not something that's going to stop me buying it on a short-term view, but it's definitely something I'm paying attention to. It's something I'm ready for. If we ever get that sort of turnaround and something happen, I don't know what it would be, something to be that catalyst for a much larger turn down, I'm prepared. It was a big sort of yap session. You got them trust. Gold view, gold chart. We've already done gold, but I will go back to it in a minute. Edge Finder has Oh, gold has H score of 12 by weakness. Yeah, we can go into that. And there's a lot of, not a lot of crypto markets. But what do you think of XRP at the minute? Look at that one. For stocks, they just announced 500 billion Nvidia deal where they relaxed a lot of disclosure requirements that backed loans for AI data centers, which can start a 2008 style pump. Yeah, maybe. We'll see. I think it's a very confusing landscape because I see a lot of parallels. You know, with the 2000s bubble, it was a case of the internet was this big new thing. It was just getting money, and then it collapsed. But the thing is, internet, you know, we use it more than ever today. It's a massive, life-changing thing. I think it's the same with AI. I'm not saying that AI is bad or it's not going to work. I do. I think AI is the new industrial revolution. But it doesn't mean that we're not going to have a crash in the meantime, repricing, and then longer term, when we, you know, the more long-term healthy continuation moves. And then we'll move on to something else. I don't know what that would be. You know, you get what I'm saying, hopefully. I'm not a huge stock expert, just my 2 cents. Okay, so you want gold, and then, hold on, what was it? I think it was just gold, actually, wasn't it? Oh, gold and XRP, that was it. Okay, so we'll do gold, we'll do XRP, and then I'll check. So, yeah, I mean, gold is very, very simple at the moment. I think, as I said earlier, there are still some red flags that could pop up. Again, escalations in the Middle East, pick up in US data. However, at the moment, as things stand, excuse me, I'm going to go with what my system tells me. Edgefinder is bullish. So as someone in the chat said, it's very bullish with a score of 12. We've just started this bullish trend on the H4. We've had the moving average cross. We're creating these higher lows, higher highs, kind of relative to the previous highs over here. So I think overall, it's pretty much set. The real difficulty comes in, though. Where would we get in? I don't want to be a buyer at this level because if we zoom out to the daily time frame, it's quite a large level of potential resistance. So we came out here, this was resistance, then we tested it as this period and here, then it was resistance here. We've seen a little bit of a slowdown in the same area. I don't want to buy into this just yet. So I would want to see a breakout higher and then potentially a retest of this level and continuation. Or I'd want to see some sort of retracement back into these daily highs where the fib is drawn right now. Then again, that continuation high. So really, as far as I'm concerned, gold is a very good market to be a buyer, but it just needs patience. I don't think it's worth being involved here because we could get a bit of a larger retracement or, you know, we could get that explosion higher. But either way, I would rather just wait for a more meaningful pullback. Oh, XRP, okay. So as I said, I don't trade crypto. It's just like stocks. I'm happy to look at the charts and go over some technicals and stuff. But when it comes to the drivers and the landscape, sentiment, everything else, don't ask me about that. I don't know. My bread and butter is currencies, specifically majors. So that's pretty much it. I keep my trading very, very simple. So XRP, sell this market. No, it's not financial advice. I'm joking. But this does not look good. And this is actually one big reason I don't trade crypto. This is just ridiculous. So massive run to the upside during this period here. And it just seems to be on a landslide back down to 0.6. You know, I would say, again, this is purely from the technical view, there might be an idea of XRP coming down to around this 0.68 and then having some correction higher. Continuation from that point, just because it lines up with the previous highs. However, with what I do know about crypto and how kind of useless it is, I'll be completely honest, I just don't really see any reason to be involved. This is just absolutely ridiculous. So the whole thing with crypto that I don't like is, oh, it's this great investment, you know, it's the future. Okay, well, you know, it skyrocketed. You probably could have made a whole load of money during this point. Then, you know, all the bag holders here have probably lost money. And now it's returning back to where it was. What's the point? This whole market is pointless. And as I always say, when I say it's pointless, I don't necessarily mean for everyone. I'm sure there are certain uses for it, but I've got like $500 in Bitcoin on the ledger, and that's it. In fact, it's probably even less than that now. I've never once ever even considered using it because I don't need it for anything. I lived my whole 28 years of life, and I've never once seen any option to pay with it. I've never been on a website where they only take crypto. It's just never been anything that I've ever needed or anyone's ever asked me about in terms of my day-to-day life. So I just don't think it's very useful. I think it's a bit of a useless asset. I'll be completely honest. There are people that disagree with that, and they've got all these use cases for it. Again, from a normal person that doesn't trade it, doesn't care about it, never once needed it or thought about it. So as far as I'm concerned, this market can completely go back to zero. I know it's probably not what you wanted, but again, just looking at these technicals, how can I analyze this? What can I possibly say about this market that would give you any optimism? I mean, look at it. Let's just see, actually, what is the rise here? So it's gone up 600%. It's now gone down 70%. So, I suppose from the percentages, if you were in at this very, if you were in it, oh my God, what's going on here? There. If you were in at the very bottom here, fantastic. You're probably still in profit. In fact, you should still be in profit. But again, that's not what most people do. Most people will see a crypto asset already rising. They'll get in the hype on social media. They'll be buying this. They'll hold it because, it's the next big thing. And then they're in some massive loss at this point. And they'll be like, oh my God, I've just lost my life savings on this crypto coin. I don't like it. Pessimistic much. Yeah, I am quite pessimistic. And again, I wouldn't be if there was a use case. So like currency markets, there's absolutely uses there. I use currency every day. I use it for my business. I use it when I go shopping. Every day I'm using currencies, real currencies, not cryptocurrencies. But again, never once needed crypto. I just don't see any value in it. Yes, there's a finite amount of Bitcoin. I don't care. Technically, there's a finite amount of apples. Theoretically, if they stopped growing apples, it doesn't mean I'm going to go out and invest in apples because they'll go moldy. And that was a really bad analogy, actually. That's not a good analogy, but I just don't care. That's what I'm trying to say. Alt season, yeah, that's the other thing. I've seen that all the time. Social media, every time I go on Twitter, alt season's coming. Alt season's coming. No, it's not. No, I've seen that same idea for the past 3 years, maybe. Yeah, I just don't get it. I think there were people that get very, very good. There's that guy Kimchi or whatever his name is that made 400 million off the Trump coin. Fantastic. The thing is, I was sat on Discord with my consultant at the time, buying Trump or trying to buy Trump. Solana was down. I don't know if any of you guys were involved, but I could not get in because the whole Solana chain went down. So even for the average Joe that doesn't trade crypto trying to do it, it's just not great. It's like, why? How can a whole crypto chain go down? That's not very reliable. That's not what I was sold. I was told crypto is this really reliable, alternative currency. It doesn't seem like that. I'm really salty about that, by the way. More of a bias on my part. Anyway, we're going to move on. As I said, I don't really know enough about it to be hating on it this much. The only thing going for crypto was untraceable. Well, that's not the case anymore, is it? Look at PayPal. What's PayPal do? I don't know. Is it PP? No, it's not, is it? That's not right. What is the ticker for PayPal? Yeah, this doesn't seem great, actually. Why? I'll be honest, I don't really like PayPal. I think the fees are extortionate, but I still think it's a valuable company. I mean, I do use PayPal all the time. So maybe, again, I don't know, but maybe I do need to get the stock box. Maybe this is the signal that I should make an investment into my stock knowledge. But yeah, I don't really get it. I don't know anything about it. I don't know what the earnings have been like. I don't know the landscape. Don't know anything about it. But from, again, a very, very broad view, I think PayPal's a good company. Again, I use it all the time. Everyone I know that's in business anyway does use it. And so maybe I'll pick up some PayPal. Maybe I'm completely wrong. Maybe some detrimentals happen. I just what it is. XRP look like Bitcoin. Yeah, actually, you're right. Actually. I generally stay away too. Yeah. Again, I don't want to sit here and be an absolute dude. I know that's what I have done tech, but I'm sure there are reasons to be trade to have Bitcoin. I think on a short-term trading aspect, still fine. You know, you can still get in the Binance. I think you can short-term trade Bitcoin. I think there's futures for it and things. So I think there is, you know, still tradable. But I'm more talking about the investment side of it and the actual use case. I personally don't see it. Anyway, there's way too much optimism about Bitcoin. Yeah, that's the thing. I remember there was a lot of hype about like the SEC and it becoming into banking and all that sort of stuff. It's like I've not seen any of that. You know, you can get a Revolut account and invest in crypto, but again, who cares? Going to 12K, El Nino. Oh my God, yeah, the whole doomer thing I've seen around El Nino as well. To be fair though, I'm in London at the minute. I was talking to my dad this morning. I cannot find a single piece of green grass. There is some behind me in this garden, but that's because it's fake. AstroTurf grass. You know, I mean, actually the greenest area in London, the greenest borough. There's loads of the parks where people go and do yoga and running and football, basketball. It's dead. There is not a single piece of green grass in London. We're in a real difficult situation. Anyway, I just realized I've got 5 minutes left. I've been yapping way too much on the stream. I do apologize. Hopefully I've not lost too many viewers for Alan. Yes, I'm in London. Everything's yellow. Yeah, exactly, Meg. Oh, Mega, we should get a pint. We should go out for a drink. But yeah, no, it's really bad down here. Bite ban and all that fun stuff. Anyway, as I said, we do have Alan coming on in about 5 minutes, so don't go anywhere. In the meantime, though, I don't think there's really anything for me to discuss. My yields still aren't loading, unfortunately, which is a bit annoying. I don't know why it does that. TradingView needs to fix up. The Japanese yields are still running higher. The yen still seems to be really struggling to catch any sort of bid here. You can see here we've got pretty detrimental price action on the weekly for the JXY. Yields, as I said, 2-year and 10-year still screaming to the upside. So yen, I would say, is still doomed in the short term anyway. Gold still running higher. I would, as I said, still love to be a buyer of gold. Oil is still kind of stuck in this wedge. I wouldn't want to be involved in oil. I would say my point still stands that I think from a really high level view, oil is still a pretty good buy. And the reason is because that's kind of just what's been proven. You know, even when we come down, we get these re-escalations and continue higher. So when I say good buy, I wouldn't say actually buying at market. I just mean as a general sentiment, I would still lean towards the bullish side, especially if we get de-escalation headlines. Historically, this has been proven, or they have been proven to actually be good buying opportunities at the lows. Kind of like the intervention. So when we get the intervention, you don't buy it straight away. You wait for it to settle, you wait for the move, and then you look to buy for technical support or whatever it may be. And then you look to be a buyer. The headline. Not financial advice, of course. That's just what I've noticed. What else do we have? I think the Nikkei's recovered. The Nikkei's recovered fantastically. It really pains me to say that I was short at this previous resistance show at the break. I was looking for this retest and continuation lower. Completely blown out of the water on that one. So I would still like to be I'd love to be a buyer of the Nikkei. We can see that reflected here on the Bollinger Bands as well, actually. And unfortunately, I noticed this after I'd already taken the loss. What we can see is on the weekly time frame, we had a 200 Bollinger. Is that actually typically does get used as a pretty decent support level. Of course, not every time. Like here, we did actually break through, come to the 200. But with this market, I would actually say a Bollinger might be quite a good indicator to be a buyer at some point. You know, you could use it as a bit of an entry criteria. So either off this Bollinger Band, maybe you call it the extension, using this as support. If it doesn't work, look for this 200 weekly moving average to come into play. Now, I would still say this market, technically speaking, is overbought. You know, I would say we're still very, very deviated from this 200 moving average. You know, I think some sort of mean reversion at some point is warranted. I'm not going to call that, an index. You know, they do typically just continue to run. So I'm not going to sit here and try and short it or anything, but it wouldn't surprise me if at some point we do get a bit of a larger mean reversion towards 200 weekly at some point. I think that's kind of it. Bitcoin is still looking pretty bad. You know, last week I think I was saying I wouldn't mind maybe attempting to be a buyer. That's not really the case at this point. It does still seem like 55K to 50K might be the next stopping point. But again, that's just from technicals, so take that with a grain of salt. I don't think there's really anything else for me to talk about. We've done gold, dollar yen, we've already covered. Pound CAD's not looking the best, but there is still room for recovery. Aussie US dollar is doing quite well. Euro dollar is not doing fantastic. As I said, I'm going to cut this one today if it closes above the 200 daily moving average. Aussie New Zealand, I might be looking to go long at some point. Not UK 100. This was interesting. Oh, this is interesting. We were looking, I think last week, earlier this week or last week, either way, whatever. We were looking at this 50% retracement because it lines up with the previous highs. So this actually might be an entry. I've just seen this, and it's a good thing I checked. So we might think, actually, after this stream, I'm going to execute this position on the FTSE. I'm going to look to go long. Is it still on the edge finder is a question? It's not. Oh, sad, actually. So the UK 100 is getting a really good score on the edge finder previously. I think it was up towards 10 at one point. It seems to have completely dropped off. So actually, yeah, maybe I won't be taking this trade, but I love the technicals. Anyway, ladies and gentlemen, we do have Alan Perez coming to take over the show. Guys, stay safe. Don't get margin called. Don't go anywhere. As I said, we've got Alan coming to take over. So guys, see you all on Monday. Stay safe. See you later. Have a good one.
Hey traders, don't go anywhere. The show will be right back. I just wanted to tell you about today's sponsor, that is ACAP. ACAP is currently offering traders outside of the United States a huge welcome bonus when you create a new account using the link that is being dropped in the live stream chat or in the description down below. When you create a new account using our referral link, they'll give you a 20% deposit bonus to your new trading account. For traders who prefer trading on a brokerage rather than a prop firm, this is a great option in which you get a nice little boost to your new trading account. But I do also want to disclaim that terms and conditions do apply to this, so please see the full details using the link that's just been dropped in the live stream chat. Alternatively, you can scan the QR code that you see on your screen right now if you're watching from a desktop or a TV. ACAP has several regulations worldwide and is a very well-known CFD and Forex brokerage. So check out ACAP if you're interested in switching over and taking advantage of this really generous welcome bonus they are offering our subscribers now. As always with any sponsor, please do your due diligence to make sure that this is in fact the right brokerage for you and your trading style as well as your own risk tolerances. Thanks to ACAP for sponsoring today's content. Now back to the show.
Good morning, good evening, good afternoon, everyone, wherever you guys are watching. Hope you guys are having a fantastic day. Check out ACAP if you are looking to switch brokerages. They're offering a 20% welcome bonus for a limited time, so that is a fantastic return. So go ahead and entertain that if you want to. Not for U.S. clients, but everyone else, it is free game. All right, let's keep on going. How's everyone doing? Happy Friday. This week flew by so fast. I thought it was Wednesday or something, but it is Friday already. So let's go ahead and start talking markets, right? What do we do? Alan, are we bullish on gold? Well, I will say this. Gold had a retracement yesterday. I got taken out for a profit. I was thankful for that. Got to realize something. But we had a retracement yesterday on gold to the 38.2-ish area. And, you know, given that we have the 2-year yield falling, we have a softer dollar, we have the macro landscape painting a good picture for gold. You have rate probabilities coming down for rate hikes. Given that, I went ahead and re-entered gold. So we had a pullback into the 38.2 level where support was at. And so we are back in it again. I have stops trailed below structure. We have to go ahead and overcome this level here. So this level, in my opinion, turns back into resistance. And until we overcome that level, then we can start trailing behind that. So we need to see what happens right around here at this 4380 level, you could call it. But yeah, that's kind of the picture there with gold. I also went short dollar Swiss as well. So dollar Swiss, I put that into the Discord chat. We have this level here of resistance that looks quite nice. Again, we have the 2-year yield falling. We have softer dollar. We have lots of things, right, that are painting a really good picture here for the dollar short story. And you're also seeing a breakdown of technicals as of now, right now, on the DXY. So you can see that here we're breaking down lower. And so with dollar Swiss, I actually like the trade. So I took it to the short side. We do have like this very small intraday upward trend line here that dollar Swiss has been trading with. So we actually do get a breakdown further, then I actually like it even more. We probably see some momentum behind it. So it is very close to my entry point right there. So it's still very early on. Again, I took the trade yesterday. So that's that. I have my stop below structure. Again, if we start to see a breakdown of the technicals, and I'll just trail it further and make it a risk-free trade. But that's it. Euro dollar, you guys know I've been long on this one here. We're getting close to my take profit level. Likely we go ahead and tap into that 200-day moving average, that overhead resistance right up above. This one is a risk-free trade. It's trail at break even. So whatever happens, happens. But again, we're starting to see a breakdown in US technicals. Also, too, what I like, yesterday we saw oil kind of trading lower a little bit, rejecting this level too. So, ideally you get some softer oil, and that only adds more fuel to the trades. So pretty much I'm 100% exposed short dollar. If you think about it, I'm going long gold, short dollar Swiss, long euro dollar. So I'm pretty much taking advantage, or trying to take advantage of, this DXY softness story that we got going on. I'd be pretty mindful of what happens here with DXY once we tap into this 200-day moving average. At that point, I would have to be mindful of the situation and just see what happens when price gets here. Maybe you have some buyers step in to try to take this higher. Maybe this is a buy the dip for them. So once we get to the 200-day, if we get to the 200-day, I'll be looking to see for take profits, or to see if I want to continue it lower. Because if you do see a breakdown of the 200-day, you get like a break and retest type situation, then I probably just lift my, or raise my take profit limits, right? For on euro dollar, for example, the 200-day is right over here. So if we do get a break above it, then I probably look to shoot for a 1.18 or something like that. So we'll see, but it's still early for that, but something that I have to be mindful of. But that's pretty much all I'm doing here. You guys are funny. Stop using your AI brain to milk gold. Nah, man. I could see why you guys love gold, though. It's trending, and everything else has been somewhat boring. Equities at all-time highs. You don't want to trade that. Currencies have been very boring. Like, you guys know my frustration with the euro dollar trade. I mean, technically it's getting some speed here today, but nonetheless, right, we are still within this range, not really doing much. So the metals market, it's the only really thing that's really worth like looking at and being active in. All right, let's see. Can we check gold net options volume? Of course. So let's go ahead and take a look at that here. I'm curious myself. So let's go crowd sentiment, net options volume. Let's see. All right, so we're not extreme, but we are bullish. So I like to see that. Let's go to put to call ratio too. Let's go put to call ratio doing. By the way, look at S&P, guys. S&P, high call volume. Gold. Bullish sentiment, very bullish. Can I zoom in right here? We are bullish. So it could be a bad sign. But again, here's how I'm thinking about it, okay? You have a strong momentum market. Likely, not certainly, but possibility is that you just get these shallow pullbacks when you have a lot of momentum like that. But I'm very open-minded too. Like, let's be real. If I get stopped out, okay, even better. I can get filled over here at the 50 or near the 61.8. Either or works. Pound dollar is very strong. It really is. What's it doing today? Yeah, pound dollar has been very resilient. Very, very resilient. Pound dollar is like the gold of the Forex market right now. It's like been the only one that's really been picking up. That and dollar cat. Dollar cat to the downside has been pretty rough too. Look at that. Boom. Alan is becoming a gold bug. Trading gold with cojones of steel. You guys are funny. Alan, look at DXY. Sluggy, I'm looking at it, man. I'm loving it. I'm McLoving it. I might get me a McBiscuit or something after this, but I am McLoving the DXY softness right here. We got to see what happens though. You're still in this like funk of a range, you can call it. I mean, you guys see this just as much as I do. This little thing right here, right? So if we break this down, I'm happy. How much? That's a great question, Ball Out. How much is UJ without looking? That's a great question. In fact, that's how you know. Actually, this is like a personal this is like a personal kind of test that I have that I do sometimes. Not that I do often, but like people that talk markets. Like, have you guys seen those street interviews? It's been blowing up lately. There's this guy that he does like street interviews. I think it's like in Miami or whatever. And he just asks like, what's the price of Bitcoin right now? And you get these numbers like, oh, it's like 10 million or it's like $50 or whatever. They say like, would you take $10,000 worth of cash or 10 Bitcoin? And people are like, the $10,000 cash. Why? Because Bitcoin is like worthless or whatever. That's kind of like how I know, right? So like I look at the markets every single day. So like I kind of know, give or take, the spot price of different asset classes. So like that's kind of a giveaway too. Like if they're like way off, or if you don't know what's been happening a little bit, it's like, But yeah, those videos crack me up. Let's see. Okay, you guys are talking about something completely. I think you guys are talking about DXY. All right, let's see what's happening right now. The 2-year continues to soften. I really like to see this, guys, from a DXY short-term bear perspective. Slug, yeah, I love that too. Tracks NYC, giving out free gold and you have to guess the weight of it. Yeah, those are some cool videos. So 2-year yield, really breaking down here. I want to see that continue. I also want to see the long end follow through with that too. So you do have the 10 somewhat softer today, you could say. The 30 is still green on the day though. But I do like to see this. The 2-year yield that tracks Fed policy is continuing to break down. Makes a lot of sense. We're going from 2.5 rate hikes to only 1 rate hike. So I am liking the story here for the 2-year yield continuing lower. Besides that, though, I kind of don't want to add any more exposure, just because if hypothetically all of my stop losses get hit right now, my open risk is about 2%, give or take. So don't really want to add more exposure now, depending on your risk tolerance. Some people put 5% on the line at once, 10% on the line at once. I like anywhere from like 1.5 to 2%. So kind of don't want to put any more trades on, but I'm pretty happy with my positioning. And yeah, there's really not, and even if I did want to put something else on, there's really nothing else to put on. Again, equities are at highs. Pound dollar is very strong. I would have loved to bought this or anything pound basket related, but no pullback opportunities. So that's already out the window. Dollar CAD to the downside would have been nice, but it's already extended, right? There's no pullbacks. It's just kind of doing its thing. I'm actually very curious to see what happens here at the 200 day as well. So I'll be watching that one, but nonetheless, I wouldn't add to the position. It's already stretched. Silver, not my thing. You guys know that. And oil, I would love to buy the dip on oil, but there's no dip. So unless we see ourselves at 68 or 64, then maybe, but nonetheless, we are right over here. So nothing to do there. What else is a possibility? Bitcoin. I mean, ideally, I want a 200-day visit right over here, but we haven't got that. We've been just chopping around. It's starting to get weakened. It's starting to weaken a little bit, but again, not something that I'm willing to chase. What else? Come on. Let's see. The miners. Let's see what the miners are doing. Let's go to top status page. Let's refresh it real quick. Okay, I'm going to remove the neutrals. I'm going to also remove the majors. Let's see. What's okay, so we have gold bullish, pound yen bullish, silver bullish, makes sense. Pound Swiss, pound Kiwi, bonds. What is TLT doing? Is this a buy the dip on TLT? I mean, it's a huge discount. It's a huge discount. Maybe you could target a 200-day moving average. If you start to see yield as a collective start to move lower, that could make sense. But right now, it's kind of too early for me. Okay, what else? Euro, CAD. Yeah, there's really nothing much, man. There's really nothing much at all. It's just basically short dollar. If you can find a short dollar trade, that's kind of the way you would go. Let's look at Aussie. Aussie, no pullbacks at all either. Just straight moving up. Kiwi. Okay, if you have no exposure whatsoever, Kiwi just tapped into the 200. This is also support. Stop below structure. That could make sense. But is it the best one out of them all? No. So that's tough. Prisoner added to gold longs a couple hours ago. Way to go, man. Welcome aboard. Hopefully it works out for us this time. Momentum does look good. Oh, well, and don't ignore the Bitcoin bearish reading. Well, you know I'm bearish on Bitcoin. You know that, Slugs. I just gotta wait for the pullback, and I'm not getting it. So I kind of have to ignore it a little bit. I don't want to chase, and I just don't have experience with it enough to see like, okay, is this enough of a pullback? Like, is this level of resistance enough? Right? I don't want to make that gamble, and I don't want to let my naiveness result in an unnecessary loss. So I'm just going to be patient with Bitcoin. If I get it, I get it. It'll be a cherry on top. And if I don't get it, so be it. I'll let it do its thing. Nonetheless, I will enjoy the decline as a spectator. Gotta know when to be patient and press the position. For me, man, I'm just going to be patient on Bitcoin. Like I mentioned, I already have my max exposure. It's maxed out already, or at 2%. So even if I wanted to get into Bitcoin, I would either have to reduce some exposure somewhere else, and then that raises the question: well, what's the trade-off there? Like, if would I reduce gold to get into Bitcoin shorts? Probably not. Like, I like the gold trade better. Would I take off or reduce some exposure in dollar Swiss short? Probably not. I like the technical structure. I like the fundamentals. So again, no. So it'll have to be a balancing act, and so I'm just gonna spectate. Oh, you're talking gold? Yeah. You don't touch crypto with a 6-foot pole. Respect. What open gold trade do you have? Well, I had the gold trade that took me out yesterday for a profit, and now we had a pullback last night. We had a pullback into this level right here. So we pulled back into this level. This was support. If you measure out with a fib, you can see that it is around the 38.2% retracement level, and you had a quick recovery from there. So to me, if this is a strong market with lots of momentum and it gives you shallow pullbacks, then this to me was sufficient enough to go ahead and buy gold. So I went ahead and did that. I have my stop below this level here. And again, I'm not all in on this position. Okay. If I get stopped out, then I just buy it back over here or over here. The lower, the better. Okay. The lower, the better. I am not, full on margin here at this price. I am just simply buying on a pullback. Okay. So that is very, very important to note. I am not all in. I am just simply re-entering on a pullback. You're waiting on a correction to go for 4180. 4180, let's see. 4180 is all the way down here. That's probably around the 61.8 if I'm not mistaken. Let's see. Breakout candle, 61. Yeah, 4180 is right around that 4200 mark. Right around here. That's like the ideal pullback, honestly. Let's see. You guys are talking about Bitcoin and its cycle. I wish I knew anything about that, but I don't. Bitcoin hasn't seen a true bear market. So really to kind of imagine if we get that and then you look at Bitcoin prices, like maybe at that point, if you see Bitcoin at like 20K or something crazy, some crazy discount, then maybe I could, buy Bitcoin for the long term, but trading it, Nah, man, I think it still has a lot of washing out to do, like Marco and I mentioned yesterday. Let's see. What are you guys watching though? Yeah, 20K Bitcoin isn't impossible. I would think not, man. I would think not. This was a little bit of a top right here. You have this right here. Yeah. And that's like 60% off from where we're at right now, I think. 67, 69, 70%, give or take. Just out of curiosity, what would make you turn bearish on gold? That's a great question. So let me show you this. Let's say that the 38.2% retracement level that I was watching right now that caused me to buy gold right here. Let's say that it wasn't enough and you have a deeper retracement, right? Let's just assume that. Well, in that case, this level fails. And I think that even if you see gold trickle down to here, or even down to here at 4120 or 4200, give or take in this area, or not 4120, like right over here. So let's say gold falls all the way down here, even more. That would look like gold is crashing, wouldn't it? If you see price come from here and go all the way from here, automatic assumption is, okay, the gold trade is over with, right? Well, not necessarily. There's a lot of things that could cause us to drop all the way down here. It could be profit taking. It could be extended sentiment or extended positioning, right? It could be a washout, if you will. There's lots of things that could cause us to get to this level at 4,200 without disrupting the theme to the upside. So you asked the question, what would it take for me to go bearish on gold? Well, if you were to get rate hike expectations come back into the picture, maybe you see elevated inflation prints, maybe you see a stronger job market, because that's really the big one, which is the job market, right? Like if the Fed has to save the job market, the way they would do that is by cutting interest rates. So if you see strong labor, hotter inflation, right? Those things right there, higher oil prices or yields, this chart right here you want to watch. Look at the 2-year yield, US 2-year yield. It's breaking down as rate hike odds diminish, right? It's going lower. But if you see this thing start to pick back up again, then that is rate hike expectations coming back into the picture. Gold does not like that. Okay. So you can see that there is a correlation with this chart going down and the gold chart going up. So that's what I would need to see. I would need to see US 2-year yield trick back higher, making some meaningful gains. I would need to see a stronger US dollar, and I would need to see inflation come back into the picture, retrending higher, and probably some strong labor data. Right now, you're getting none of that. You're getting the complete opposite, and that's why gold has a lot of momentum behind it. So, and how you would know that that's happening, right? Well, one, you would just look at the chart here, or two, you just look at your edge finder copy, right? And if you don't have one, buy it. That way you know what's going on, right? Because this already tracks inflation, labor, seasonality, the technicals, all of that stuff. It even tracks the 2-year yield chart along with it. So even if you don't want to look at the 2-year yield chart, you just look at this right here. So this will tell you. So if this flips to neutral or bearish, then at that point, if you are at some low prices, then I would question getting back into it. But it's that simple, man. The edge finder does it for you. So you don't have to do that. Yeah. No gold bearish until we get below 41.75. If you get below that level, like if you start to see, obviously gold price is way down here and you're no longer seeing a bullish reading on edge finder, right? Then at that point, then you start to question the integrity of the trend. But for now, that's not the case. Alan, I did catch Aussie dollar long side. Dude, that's awesome. I saw no pullbacks on this thing at all. No pullbacks at all. Yeah, if the first leg retracement is larger than 50%, the momentum may not be as strong, and that it could be. That's why too. I got in here at the 38.2, because if the 38.2 does hold, then that means this is a market where there are shallow pullbacks, and there is just buy the dip on some shallow pullbacks, and that right there is an indicator of strong momentum. So, I mean, right now it's doing good again. I'm still skeptical, right? If we pull back even further from here, because this right here is still a technical level of resistance. Like if it wants to hold right here, it will reject it, and then we just continue lower. So have to look out for that. If you were to get a break above here, then again, we just continue trailing stops below structure and let it do its thing. What happens to the trade deals? No idea, man. No idea. But they are saying that the tariff inflation is starting to pass through now. So hopefully that is all behind us now. Bala, did you get the API from Truth Social? DXY is near support right now. Let's look at DXY. What are we doing with DXY? There it is right there. Let it keep going down. If you see this break again, this is a good sign. If you were to see DXY break below this level of support, we probably see some momentum in the other pair. So I'm long euro dollar, and I'm short dollar Swiss as well. Dollar Swiss, I'm looking at this bullish trend line here. So we have a rejection of this longer term level of resistance right around over here. And then you also have this upward bullish trend line as well. So we held this level of resistance. We didn't go above. My stop loss was right above it. If we do get a breakdown of this upward trend line, then likely you see some follow through momentum. And that will be fueled by more if you do start to see the DXY breaking down and the 2-year yield continue to break down as well. So we're watching that, but for now it seems to be the case. And also too, we kind of have an open road ahead as far as US macro. So after this week's inflation data, we really only have FOMC meeting minutes next Wednesday. And so until then, we have pretty much open range. So we'll see what happens. The only thing that could disrupt the trades would be an surprise spike in oil, of course, right? So if oil spikes higher, if you have some kind of escalation in the Middle East over the weekend, which we all know is very possible. There's definitely been times where you go into the weekend, there's some kind of an escalation, and then come Monday, things start to soften. But if you were to see that and you start to see yields rise again, the dollar starts to firm up a little bit, then that would, of course, disrupt the trades. But for now, things are pretty in line with my ideas here. And two, I also just don't want to put too much emphasis on things that I have no control over, like oil prices and escalations and de-escalations and stuff like that. Like I would rather focus on the macro, and the macro is just telling me something else. The macro is telling me that, you probably have some softness in the dollar. Even yesterday too, like we had some kind of I forget what it was, but it was something that shook up the market and caused oil to spike up a little bit. It was regarding a carrier ship that was being rotated into the Middle East, right? And so again, that was something that was short-lived, and I think that once it faded off, the macro overrided that and continued, with oil lower. So I just don't really put too much emphasis on that anymore. Let's see what else we got going. There's really nothing much. I think I covered it all, guys. But silver and gold are making some kind of a recovery today. So we'll see if that continues to last. Dude, that's awesome. I cut that trade short, man. I was long Aussie basket earlier this year. Let me just reminisce, okay? Let me get jealous. Aussie Swiss, what is it doing? Dang, man, that's awesome. I love that. Positive swaps, grind higher. Look at that. Beautiful trade, man. Congrats. JPY is going strong. Any news happening? Not that I know of. Let's see. Let's refresh financial juice. Nothing going on. Let's go to currency strength. It's in the middle there. The biggest winner is Kiwi dollar. The biggest loser is dollar, US dollar. And we have retail sales coming in very shortly, about 40 seconds or so. And then after that, I'm going to go ahead and pass the show over to Nick. He'll probably cover that with you guys and continue on the analysis. And then I'll be back in about an hour or 30 minutes or so. One of the two. Forgot about gold if that zone holds. Yeah. So Nick, if you're in the background here, this is what I did recently. We had a pullback into what looked like the 38.2. So given the momentum of this market and having a lot of things kind of pointing in our direction here, I was thinking that if you have some strong momentum, then you have an environment where you have some shallow pullbacks. And so I went ahead and bought into this level here where price had held before. So we'll see. I have stops below structure. And I'm very open-minded, again, if we were to get deeper pullbacks into like 4,200. So that's kind of what I'm looking at there. But we'll see. We have the 2-year yield fading off here down 1% today. So if we have a continuation of that, you're also seeing a breakdown in the dollar as well, just on a fractal time frame. If you go down lower, you have this level here. 200-day moving average is right there. So if we flush that, I would imagine there's some follow through with that. If you continue to see oil prices tamed lower and yields lower, and then that would hopefully translate into more momentum with gold. But all right, man, I'm going to pass the show over to you. And guys, I will be back here very, very shortly.
Don't go anywhere, traders. We'll be right back to the show. But real quick, I wanted to tell you about today's live stream sponsor, Prop Shop Trader. If you're a futures or equities trader, let's talk a little bit about what Prop Shop Trader has to offer. So first and foremost, if you're a stock trader, there's not a lot of firms out there offering stocks. So this creates a unique opportunity for stock traders to get in on the prop firm action. Prop Shop Trader offers a variety of various different account types for both swing and day traders looking to trade futures, whether that be gold or Nasdaq or ES or YM, whatever you trade there, or on the equities side. They also have a very scalable environment where you can actually trade up to 20 accounts within the same prop firm. A lot of traders nowadays are trading with lots of different prop firms, but Prop Shop Trader wants to make it more accessible and stackable to build your relationship with a single prop. With competitive pricing and transparent rules, Prop Shop Trader stands out as a solid option to consider for those of you who are trading futures or equities. If you're interested in exploring Prop Shop Trader for yourself to see if the accounts are a good fit for your trading style, then make sure to use our promo code A1 Trading to get a really substantial discount at checkout. Our code will get you the best available prices right now. As always, I want to disclaim that prop firms are a great way to scale up your trading capital if you have the skills. So I am personally a fan of waiting until you have consistency in your trading before attempting to take any sort of prop firm challenge. But if after reviewing Prop Shop Trader, you like what you see, it fits your style, and you've done your due diligence on the prop firm, you want to push forward with it, then make sure to get that extra discount with our promo code. You can also find the link for this down below in the description. The live stream chat should also be seeing that pop up, and we have a QR code on the screen that you can scan to check them out now. Thank you again to Prop Shop Trader for sponsoring today's live stream. Now back to the show. Good morning, everybody. Welcome back. Hope you are all doing well. Let me get this switched over. We've got our Prop Shop Trader special 50% off discount stuff going on right now. If you scan that QR code, use our promo code, etc. Shout out to them and to our other sponsors for making this show possible. We have a crew of wonderful, different creators adding value to the show every day, and our sponsors make it possible. So. And of course, you guys, thank you for being here. Happy Friday. Hope you guys have a nice weekend planned ahead. Let's see. I kind of have, I don't want to jinx it, but I think I have a somewhat quiet weekend with not too many things planned. Those are always nice. We've got a million things going on all the time. It's nice when you have a day to just chill and do very little. Anyways, I went to sleep last night looking at gold, and I was like, okay, maybe we've got the pullback coming in. And out of the corner of my eye, I saw, okay, we do have some support here. Let's see what happens. And sure enough, support, at least for now, seems to be holding for the bulls. A little tricky, when you have this desire, this setup that we've been talking about a lot, wanting to be long gold. You look at these and I'm like, ooh, should I go ahead and take the stab? But I'm going to stick to what I do best. I like to wait for fib retracement levels. Nothing magic about them. It's just what I've done for so long. I like fib levels. I like support and resistance levels. And I think that there's something just psychologically, more attractive, waiting for that 50 to 61.8% retracement as an area to look to get long. And if I get the trade, excellent. If I don't get the trade, then it's on to the next. Good morning, Nick. I'm on an 8-trade losing streak since June. Any tips to keep going? My parameters and risk management are good. No revenge trading. Win rate isn't pulling through, and it's getting tough. Great question. And the answer to it is more boring than you might expect. But I would ask you to think about this. It sounds like you've got a strategy that you've spent some time testing and building out and mastering. And now you're asking, well, now I'm still got a 8 losing streak. New traders will look at that and say, you took 8 L's. That must be a bad strategy. Professional traders will know that's very within the realm of possibility if you have a strategy, especially one where you have low win rates, but high reward versus risk type trades. If you're someone using a 3-to-1, if you're using 4-to-1 risk reward, if you're trailing stops, 8 losses in a row, you know what we say around here? We say, that's nothing, right? Because if you have a low win rate, bro, it is relentless sometimes. You can take loss after loss after loss. And the only way to survive it is small trades, right? That's it. Now, if you're having 8 losses in a row and you are somebody who does more like 1-to-1 risk reward trades, like you've got, maybe something more like Chris Pulver, we got him joining in just a second, where, they are taking high probability trades. Like these trades most of the time are going to work out in your favor. Every once in a while, you got to pick up the pieces and deal with the challenges that come with, high win rate strategies. But yeah, it's one of those things. If that's happening, then that's just impressive that you're losing 8 in a row, but could still theoretically happen. The biggest thing is making sure that your position size is small enough that you can survive the downside. Like everyone here, if you have a strategy where you go for 3-to-1 risk reward trades, 8 losses in a row, it's not just possible. It's inevitable if you trade long enough. If you use a 3-to-1 risk reward ratio, you will have 8 losses in a row. It's going to happen. The question is, can you survive it when it does? And the only way is take the position size that you think is small enough and cut it into a fourth. That's my opinion. I'm not telling you what to do. There's nothing easy about trading. I'll bring in my friend Chris Pulver here. Let me set this up. Let's see, just switch this over. Hey, Chris.
Happy Friday.
Chris, I have a question for you.
Okay.
In trading, is there ever a time where you just feel good? Like things are good, like everything is all clear, no problems in the world? Or is it more the case that you're always fighting some kind of battle? I should have held longer. I should have let go of more of my position. I should have sized down my trade. I should have, isn't there always that internal strife? Like that never really goes away.
Agree. It's a chase of perfection that you'll never feel. Yesterday is just an example. It's like my kind of morning was really profitable. I closed out early within the first 60 minutes, which is much faster than usual. But I took the profit, booked it, and then I just did a little bit of scalping later in the day just to kind of supplement. But yeah, the original trades that I put on, one of the key levels was 7,800, and we closed yesterday at 77.99. That would have been worth $1,500, and it was I kind of had an idea that was a good trade on the day, but it's I probably left $2,000 on the table. It's I still made money. It was a good day overall. I mean, it hit a decent profit target, but it's you look at days like that where it's it was a good day, but I'm still not happy. And then a bad day, of course, I'm not happy. If the market's going our way, it's okay, well, when do I get a pullback so I can add more? It's there is no You know, and that's not a bad thing. That's just like, that's what happens when you're constantly tweaking, refining, pruning the portfolio, just trying to move the needle. It's like gaining an edge sometimes is just a lot of work.
And it's
but very rarely does it feel like, oh, this is easy. It never feels like that. I don't think it does.
no, never. And I think if you sort of internalize that things never are gonna feel quote unquote good, like I would say 10% of the time I'm in trades that are going really well and I feel great. But 90% of the time, 90% of the time, I'm like, dang, I this is frustrating. I'm not getting a pullback on this. I'm in drawdown on this trade or whatever. Like there's something okay with acknowledging like trading is just always going to be a grind. It is always going to keep you on edge. And if you can accept it and stop like trying to get back to a state of feeling good in your trading, just accept that it's work. It's a grind. It's a never ending puzzle that, it's like for every piece that you put into the puzzle, there's like 3 ones that pop out. So it's like a never ending challenge, but it's the chase. So Chris, what are we thinking here? We've had good inflation data. We've had soft jobs data. Economic growth statistics we've been talking about a little softer. From a macro perspective, we rambled on about gold in the last few days. With stocks, we're at all-time highs. Do you feel like what I know we've talked about risk being more to the upside, the concept of we have more potential like when we say risk to the upside, we're talking about like there's more risk to being short than risk to being long. Do you still feel that way? Like what's your thesis about going into year's end?
Well, I think we need a bit of a shakeout to get into year's end. I don't think we can go another 5 months without having some type of dip or pullback. There's enough still going on with September effect. There's enough going on with this, we've gotten through earnings season pretty much unscathed. There's still the bond market lingering with a way to maybe test the Fed. There's still something that Trump, like we're starting to see that tariffs are getting kicked around with a company. You want drones, you build more U.S. drones and do more. There's tariffs talk again. Trump speaking today at 3 p.m. I mean, he's not the president that likes to talk down the market at all. In fact, he's completely the opposite. But I do feel like there's a stage where this market kind of feels like Icarus and is flying too close to the sun, where it's like, dude, it is relentlessly up. And even look at futures this morning. I mean, yesterday's move right out of the gate was really just heavy amounts of out of the money call option volume. It was really manipulated right at the open. I feel like there was just a massive surge in like algo buying yesterday morning at the bell. But look at what futures did overnight. Absolutely nothing. This is S&P futures. I mean, this looks like it's broken. Like, how is this not moved at all? So, I mean, coming into today's trade, it's like either we're just, there's no real reason to sell. We've got OPEX next week. There's no real catalyst now. I mean, again, I don't want to be lulled into thinking like this market can't, shake it up a little bit. Low volatility is usually met with high volatility, or at least a resurgence of volatility. And also going into next week's options expiration, I said this morning, if we have stocks reaching fresh highs and VIX is at fresh lows going into an OPEX or getting through the OPEX, it usually turns and changes coming out of it. So if we go into next Friday, so this is like an idea of next Friday. So we have, I'll put ATH here for all-time highs because we hit all-time highs on the Russell and the S&P. The Nasdaq is still clawing back, but if the Nasdaq hits those like summer highs and that becomes a resistance level, the Nasdaq could just be just a big fat range that we deal with. But VIX is going lower. So if we get through OPEX next week, usually we will see stocks turn lower and VIX turn higher. If that's the, it's kind of like it hits that threshold of like, okay, timing wise, we're going to see some opposite flows coming in. And September is usually like the most bearish month in stock market history. And sometimes it's carried over with we have Jackson Hole still, right? So even through OPEX, we have Jackson Hole. It's still August. It's still like a lower liquid month and lower volume month. On a positive note right now for today, we just cracked all-time highs yesterday. I do think that all-time highs are met with that slow, drifty momentum. Like, why? Why would the market fall today? Like, why right now?
Yeah.
Because of soft retail data? Who cares?
Right.
You can't fight this momentum.
Well, and that's the thing is, you know, the expression of don't fight a quiet market, you know, because when you have the VIX sitting down here in the 14s, like what's it going to do? Most likely market's just going to slowly grind higher. Like it's just going to chatter higher. And if you're someone who's like, you know, where's the volatility, you know, when's it come back in? It can stay quiet for a while. Like we could sit here for a little bit until we get some more uncertainty about some new thing, but who knows when that is. And in the meantime, you could have S&P kind of grind higher every day, you know, 20 points, 30 points, 40 points a day, like real slow. And, you know, in the meanwhile, just drive yourself crazy if that's something that you're staring at. So it's tricky. I think that, you know, we talked a lot about how, for me, the easier place to look for trades right now is in the precious metals. I feel like you've got some movement there, some trend to the upside that I think has plenty of more upside to it. But yeah, it's really one of those things. You can kind of drive yourself mad with a quiet market, and I think that the best thing to do, personally, is to sit back, watch other markets. I'm also literally just sitting in some SGov right now, like waiting for some dips if we get them. And if it happens, great. And if it doesn't, fine as is. You know, I've got a decent year so far. I'm beating the S&P narrowly, not by a ton, but the ideal circumstance for me, I think also for yourself, would be some sort of correction, some sort of pullback in the second half. I still think the year could end more positively than where it currently sits. But if we got some volatility, if we got some pullbacks, that would give me a chance to kind of step back in and buy some stuff. So, you know, I'm open to what happens. If it's going to be a runaway year for the rest of the year, then I'll probably break even with the S&P and or possibly underperform if it really rips, which I accept as a negative possible outcome for my own trading, because the alternative for me is not attractive, which is I don't want to give in to the rally. And then we get the 10, 15% correction. And then I'm sitting on this ugly drawdown that I could have otherwise avoided and just sat in SGov and collected, you know, some income.
Right. I mean, Tom Lee, Mark Newton from Fundstrat, I mean, they're calling some very specific market levels right now. I mean, Tom Lee's right now on the horn saying, okay, we're going to go to 8,000, then expect a 10% pullback. It's like, I mean, that's understandable, but it's like, how and why? Like, is this all technical? Is there a fundamental factor? I mean, I think that if we have a decent sized dip, the one thing that's been happening all year is, look, I mean, everyone's calling this, Nick, the tech bottom. Who the fudge thought a 3% correction in the index was a tech bottom, right? I get that NASDAQ was down 11%, but it's like, would you call that a tech bottom? I mean, dude, our NASDAQ bottoms have been 20, 30, 35% over the last 5 years. So 11% drawdown in one index and a 3% drawdown on another, you can't call that a bottom. And like, same thing here, 9.98% in the middle of an escalated war and oil price like shocking the world. It's like, that's the bottom. And so I think that the one thing I agree with is, if there is any dip, there are so many like portfolio managers that have been just underperforming and underexposed. And like, I think that there is a violent dip to buy, but it might be like one of those courageous levels where it's like, yep, it's going to take out some structure. It's going to challenge some structure. It's going to challenge some structure, but there's a dip to buy. And I keep going back to that 1998 example. Everyone wonders, like, it's impossible for the bulls to keep going at 20+% a year. Well, 2023, 2024. And if we keep this pace, 2025 and 2026, I mean, 2025 technically was like 18+% with dividends is close to 20. If we crank out another like high teens or 20+% year, every passive investor is going to be like, who needs risk managers? Just park it in you're just going to get 20% a year every single year. And guess what? When this all unfolds, and I know this is not bear porn conversation, but when this unfolds, what got us here was leverage and yes, earnings, but eventually what's going to get us the correction is going to be like, we are in, I heard this phrase. I thought this was a really good analogy. It's the Wile E. Coyote moment, which is off the cliff. Okay. This is Wile E. Coyote. He's chasing Roadrunner and he's out here in the middle of the cliff. He just hasn't looked down yet. Like, that's where we are. It's like, we're so far up that eventually when we look down and realize we shouldn't be this high. And then all it takes is one crack in earnings valuations, one crack in revisions. And I think that unwinding is going to be dude, way worse than 2022 was. That was a tough market to trade in 2022. But like take COVID with a V bottom, but put another low in. Like take that, and I think that's what we're dealing with. Like it's going to be a crazy unwind of probably epic proportions. The only problem is when, because I don't think it's now, and I don't think it's 2027. I think we're going to be creeping up on like 20 years of a bull market, which gets us into like what? We bottomed in 09. Get to that 20-year mark, long in the tooth. It's 2029. We're having this conversation. It's 2030. Yeah. So I mean, I'm not a bear, but it's like this. I do think that if and when it unravels, it's going to be fantastic, glorious bear fashion. That's like, this is what all the doomsdayers were talking about. But the funny part is they probably won't make any money either. They've been talking about it for 5 years, but they won't make a single dollar, right? Maybe they'll buy at the lows because they've been sitting in dry powder for 5 years watching the markets go up against them. But anyway, it's just, you know, I just think that at some point this will be the reality. But dude, the market's all in. Trump certainly doesn't want to see a down stock market. He's thinking this is a saving grace to hold midterm power. But look at these like low volume pushes and pulls. Like this is a push and then a pause, a push and a pause. And we are lulled into low volatility right now. And I don't really know what else there is outside of the bond yields going higher to be like the Fed chair test. But earnings are okay. Valuations are fine. Like, I mean, as things have gone up, it's like somehow valuations have gotten cheaper, which is kind of impressive. So anyway, it's just something I'm not fighting right now, but it is frustrating to think that this is the tech bottom. That was my whole point. It's like, who called a bottom at 3%? Who called a bottom on tech when situational awareness goes under for a Forex leverage portfolio? It's like, I guess, I mean, yeah, that needed to happen, but is that a bottom? It's like what a safe bottom it was to buy. I mean, market breadth. I'll do this real quick. So this is our S&P market breadth compared to the Nasdaq. I mean, look at the Nasdaq breadth right now. So this is market breadth, like really, really looking terrible. But look at it now. You've got of the Nasdaq 100 above the 200-day moving average is now 74.5% of stocks above the 200-day moving average. Breadth has returned in a magnificent fashion. Same thing here for the S&P. 73% of the S&P above. Now, how about this, Nick? Does this make you nervous for maybe a near-term top? If we get into these levels or get into these levels where market breadth is so good, it's like, I think we need a correction.
Yeah. Well, and the other thing that I like to look at, is your put call stuff. And what's been intriguing about that, you've got some off the chain sentiment here recently, and at least in options volume stuff that I've been seeing, you've got crowd sentiment. Let me just go back here. As stocks, fly through the highs, it's normal to get like, crowd sentiment start getting positive. But what's been really interesting is just this is a 5-day moving average on the put call ratio. Thing has been very, very bullish here recently. It's been very bullish for a bunch of stuff, but take a look at the Nasdaq. To your point, Nasdaq is really, really showing a lot of bullish enthusiasm. At the same time, if we look at like even the Russell, I saw this had some really, really call heavy volume on that side of things. If we just look at the daily flow of net calls minus net puts, surges in call volume here. Nasdaq, same thing. So, I think that is sort of a typical fashion for a stock market breaking to all-time highs. But I wanted to talk a little bit about what you were saying there about when the thing cracks, and we don't know when it's going to be, and we're not making the prediction of when that's going to be per se. But for me, I try to avoid predictions in general if I can. Like I try and just, if you ever listen to our conversations, Chris and I will always speak in ifs and thens. Like if the market does this, then I'm going to do this. If the market does. And one way that I would kind of hope that I could, or not even hope, and my strategies that I use, a lot of it involves some moving averages. It involves, what is market structure. So if I'm looking at, the broader stock market falling apart and just flushing, I don't know if you've ever seen some of these videos, Chris, but there are periods of times where something as simple as, let's do just the 200-day moving average, just because you brought it up. Something as simple as a 200-day moving average can be a really nice little filter just to be thinking about. Now, there are times where it's, it can fake you out or something like that, but just going here, if you have a stock portfolio or an entry criteria or a swing trade or whatever, where you use the 200-day moving average as a filter for corrections, for downside moves. There are obviously times where that would have been silly to, sell your stocks in hindsight, like in the 2020 drop. In the moment, you must have felt like a genius. You're like, oh, it's 200-day moving average breached, get out of there. And you watched it flush lower.
Right.
But there are other times, if you go back to the real moves that we're talking about, like the ones that are prolonged, painful, this would have been a portfolio saver. If you had, obviously, again, we're speaking in hindsight, a lot of times the 200-day being breached has actually been a better bullish signal than not. But you also have to remember, we've been living in one of the most bullish stock market environments for a very long time. If you just, sort of adjusted risk under the 200-day moving average ahead of this, your relative performance would have been phenomenal, because the S&P 500 went on to lose 50+% of its value. And had you just waited for a retest or a breakout of the 200-day moving average and bought after, again, I know this is riddled with hindsight, but it's just something to think about. I think that traders, investors, if you are someone who is like, yeah, I think, you've had a really long, incredible run in the stock market, and that, probably won't go on forever. There will be a time, Chris, where you and I are on here and we're watching the stuff that we've talked about for a long time unfold. And it will be bizarre. It'll be bizarre to be like, here we are actually watching it. Like, we got used to this market where for years it just trended higher. And it probably will unwind a ton of it in a very quick succession. And I have no idea when that is. I'm not making that prediction. I just think it will happen at some point. People have also gotten into the thinking that those sorts of days in the markets are behind us. And that makes me maybe not, if not the most worried, is that people believe that sort of thing can't happen anymore. And I think it can. I think that if I don't know what it would be. I'm not trying to make the prediction of what's going to cause the stock market to break. I'm just pointing out that being conscious and aware that that could happen could legitimately save people from not being all in leveraged on a market, thinking it can never go down. And then when it does, people are going to lose everything in those sorts of moves. Unfortunately, that's what happens in markets.
Yeah. I mean, I think that, my ability to maybe use about 40 to 50% of my capital and still generate, benchmark comparison returns or beating the benchmark with way better risk adjusted returns. That's like I was going back to the question that, I'm on an 8 trade losing streak. Well, I mean, for me, if I trade defined risk options, no trade really matters to me. Now, it works both ways. Like, I don't have, I do take some trades that are, high reward, low risk. But that's honestly, dude, those are probably the hedges I put on. If I have, unlimited upside potential, it's like, well, I just put on a hedge in futures and all of a sudden my, $500 bet's up $5,000 because the market is flushed 10% in 2 weeks. Like, that type of trade is like, I cannot believe how much money this thing's making. But at the same time, my normal trades are time is my friend. I just, roll off profits every couple of weeks, every month. And I just stack them up throughout the seasonality. And like, this has not been a year that I've been really aggressive at all. I missed the opportunity for that 10% dip in March. But go back to 2025, really aggressive through that Liberation Day, March, April correction. And it still paid me for, 12 plus months after. That's the type of position I do take. And for me to sit and wait and like, oh, we need to have a 20% correction. Dude, we might not get it. But if we have another 5% correction, another 10% correction, I will start deploying additional capital. And just, kind of ride this stuff out. But like right now, I'm probably, I want to say I'm definitely over 50% cash. I think as we've kind of taken a little audit of our portfolio for a while, but I've got 375 out of 645. So yeah, I'm at 58% cash right now. And I'm sitting at fresh year-to-date highs for the portfolio. We're doing okay, but I'm at 57% cash. A lot of that is sitting in SGov or T-bill. Collecting like, high threes right now, kind of risk-free, but that is to be allocated when I think it's appropriate. And right now, like drifting higher in a slow market with low volatility is not something I'm going to step on the gas and just kind of pump these highs. Although I do think we could have the, is 8,000 a blow off top? No, I think like, we're talking, if I'm like scared about a blow off top, we're talking like 8,500, 8,900, 10,000 S&P before it's like, holy crap, this thing's going to actually like break, right? Like the gold capitulation. It's like we would have another, 500 to 1,000 points to the upside before I would say, where this is the capitulation that probably puts in a top in the intermediate time frame. But if we just stall and drift and sideways a little, like plus or minus 1%, I mean, we went nowhere, Nick, for literally a week until yesterday.
Yeah,
literally a week.
No, I think you, myself, and also a new guest who came on Wednesday. Her name's Marilee, very, very knowledgeable on macro stuff. And she said the same thing. Cash heavy. I'm cash heavy. You're cash heavy. It never feels good to be cash heavy, to be completely honest, unless the market's falling. Then you have JOMO, which is the joy of missing out. Those are the best moments. But
right.
I think that, to that point, the first logical question fired back at us would be, well, Nick, Chris, what if the market rips, another 5% and you're sitting in cash? Well, yeah, but here's the thing. What if it drops 10? What if it drops 15%? You never know. And if the market were to grind higher 3, 4, 5%, I would make the argument that there's a good chance that you and me would both not feel any more compelled to get in. If not, we'd feel less compelled. If the market grinded higher 4 or 5%, we'd be looking at it and saying, okay, well, that doesn't change my thesis. I need volatility, shares getting liquidated, margin calls going on. That's the environment we like to step in and buy, stuff that we like. And, that's just the game that you have to play, is the patience game, I think. And sometimes, yes, it looks silly. It feels silly. You're like, I'm in cash, market's going higher. But to me, I would rather be in cash and wait for a setup that I feel good taking, rather than in the market, not really feeling good about it, but not wanting to miss out. That's not the right headspace that I want to be in, And we talked about just a second ago how trading kind of never feels fully good. Well, I can tell you, sitting on the sidelines, waiting for the setup that I like to take, is a better feeling, even though it's not fun, than being in the market when I feel that I shouldn't, and then the market tanks. That is a horrible feeling.
Yeah, you are. I mean, when you find yourself in a correlation of 1 drawdown, it doesn't feel like there's any place to hide. The only place that I've seen that you can hide out and actually have decent hedges is to have hedges in your stock portfolio, or to be trading currencies just as they present good trades.
I was going to say options, like delta neutral stuff, is the only stuff that actually could be a tangible, in a 1-to-1, correlation market, having short exposure essentially.
You have to trade like a market maker. That's delta neutral. And honestly, right now, a lot of the portfolio has shifted to like 0 DT trading for that exact reason. Like, I mean, market makers have a much tougher job than they did, 5 years ago when there was no 0 DT. Now, since 2022, it just continues to grow and grow and grow, which is impressive because it's providing so much extra liquidity, so much extra stability and efficiency in the market. But on the rare occasions we've had those 3% sell-off days, or those 2 to 3% rip to the upside days, 0 DT options has just been all like one-sided or absent. Like there are some days there are like these blackout windows where it's like the 0 DT volume is like 20% instead of 60%. Right. And that tends to be like these crazy swings in the market. What I want to show really quickly is, I know we're kind of tight on time here, but
all good
thoughts on this, dude. So let's say that the S&P can just grind a little bit higher. Let's say that Nasdaq can come up here and celebrate some fresh all-time highs with its brother, the S&P, or the small caps, or Russell hit an all-time high this week as well. Thoughts on hitting all-time highs, maybe getting a pullback, and we have some type of bullish posturing here. I mean, I could still see there being runs left in tech, or runs left in Nasdaq, but that's probably a decent sized correction at maybe 5+%. That's 6% on the Nasdaq. Maybe we pull back and just retest range bound levels. But I think what we have been noticing is, okay, this market just did absolutely nothing for like 2 months, and then in 4 days made up pretty much all that traction where it was down. But what we haven't seen this year, Nick, is we have not seen, like, this is months and months of grinding, slow and steady decline, and then in 10 trading days, it makes up for 5 months of chop, 5 months of drawdown. I mean, the upside explosiveness in 2026 has been probably the most impressive thing for me, which is another reason why all I'm trying to do on like the more conservative side is just sell premium, let time be my friend. If it wants to grind higher, we get paid. But I'm not aggressive here. I'm sitting on 58% cash for a reason. I'd like to see a more convincing dip to start deploying a little bit more capital. But I almost think like you know, look, we've got levers in the system that prevent us from, I mean, if Trump had his way, we'll never have a single drawdown ever again.
Right.
And you know, him and his cronies can make all the money they want because they'll just, you know, flat out put in those crazy out of the money call options like yesterday and probably get paid. And somebody knows something. You see it on Twitter all the time. It's, you know, you said JOMO. It's like, well, I'm sure this year we've got plenty of FOMO out there. I saw somebody mention, well, why are you guys even focused on stocks? I mean, come talk to me in 10 years after being a currency trader and see what that feels like.
Currencies, man. I mean,
at some point, it's going to wear you down. Like at some point, currencies will do. I mean, currencies aren't that exciting either.
Currencies are wonderful when there's some volatility out there, but there's nothing. I mean, it is.
You have to be a scalper. You've got to be a scalper on anything that has like somewhat of a decent daily trading range. If something's offering over, you know, 70 to 100 pips a day, there's some scalping opportunities there. But I mean, dude, I've been running a robot for 6 years on pairs that move like 50 pips or less a day, and my robot crushes it. Right.
Yeah. Right.
But otherwise, it is build positions. And I'm finally 2.5 years into this, Nick, getting some love and price appreciation and positive swap in that Swiss stuff.
Nice.
And, so it's
there you
looking,
go.
looking a lot better after a couple of years of holding a big
That's
carry
not
trade.
bad. Well, Chris, we're out of time. Good conversation as always. Thanks for that, and have a great weekend, man.
All right, you too. See ya.
Thanks. Guys, up next, we have Alan Perez taking back over the show. He's back for round 2. Last thing before I head over, you guys want to try out the tool that we are using, Edge Finder here. You can currently try it out. Scan the QR code and or click the link in the chat that will be dropping here. We are also offering now a chance to try it for free for 3 days. It is complete full access for 3 days. If that's something that you're interested in, you also get access to our free course that goes with it. So just fill out this form, hit send, and it will send all the information to your email automatically. With that said, here comes Alan Perez. Stay tuned. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Good to be back here. Hope you guys are doing well. Thoughts on the dollar today? I think that you are well positioned for a dollar to continue to soften there. So it's kind of what I'm looking at here for today. Nothing else much going on. We did have retail sales coming weaker than expected. You have yields lower. You have the dollar breaking down. Just looking at it from a 4-hour time frame here, you have this little floor right here. You also have that 200-day moving average here. So bigger picture, if you were to see a breakdown of this level along with the 200-day moving average, and we just zoom out here, you could start to see what could be a further DXY unwind. So let's go to a weekly time frame, for example. Okay, seeing a potential DXY unwind. You know, the DXY had a really, really good run there. You had some crowded positioning, I think, right around here. Once you're creeping into 105 or 101.5, 102, starting to break down a little bit more here. So war started right around over here. Okay, this is where the war started. Then you had oil rise, inflation fears rise, yields rising. And so you had a really strong market there for DXY. Now we are breaking below this upper trend line here. You had what you can call a double top. And so we're just continuing to break down further. And the next obstacle would be this one right here, 99.6, you can call it. So this level, this temporary little floor, along with that 200-day moving average. So that's what I'm looking for. If you do see a breakdown of that level, then I could expect for a lot of the major currency pairs to start trading pretty heavily, I would say. So this is a pretty meaningful support level, I would say. So I'm watching with that closely. So that's kind of my main focus today. Also gold as well. Gold is on the rise once again here. So I got in on a brief pullback there with gold. So I'm going to continue writing that thing out and see what happens from here. But DXY yields is what I'm paying most attention to right now. So we'll see. We are seeing a little bit of a bid though in DXY. So we'll see if this level holds. If this level holds, then likely we see continued boring choppiness. So as the show hosts were saying just now, currencies kind of boring here, sluggy too, right? Trading currencies in this low vol environment is a pain in the you know what. Look at that euro dollar trade that I'm in, right? It's been just chopping around here for some time, just doing a whole lot of nothing. So if we do get a break above this level and continue at momentum, then that would be happy. But if not, then it just continues to be boring there. So that's what I'm looking for on the currency side of things and DXY, all that stuff there. Let's look at dollar yen here. Dollar yen not really doing much. You did have a grind higher after this big intervention. So we're still below the 160, right? That's like Japan's OG level that they're looking to defend is 160. So we're still below that. We'll see what happens. I like 155 here. Let me go to this chart where I have all my stuff. Yeah, 155 right here would be a really good buy the dip. I wish I would have bought it right there, or 153, 152. That's kind of where I'm eyeing there for longer term dollar yen upside, catching some positive swaps, all that good stuff. Let's see. Best that can be done on FX is intraday. That or longer term swing trades would be good. So that's kind of what I'm doing. This one, this euro dollar one, was a you buy right here, and I'm looking to target the 200 day, and if the 200 day gets broken through, then I'll target the 1.18. But like with currencies, it's like they chop in ranges, right? So for example, DXY, this is kind of what I'm looking for, right? DXY, longer term stuff, right? It is just in this range right here. So the best way that I could find an opportunity in currencies where I am very, very happy would be if you find DXY at 97 or somewhere within here. If you were to find DXY right around here and you just start accumulating a position, right, responsibly, and then you break back above and you start to trend higher or just chop around, holding that for a long time with positive swap would be very, very nice. Like I would love that. Now you could say that you're seeing the same thing, but to the downside, right? So you can say that you are in this broader range here and you're tapping into this level here on DXY, good level of resistance. Why don't you just do that, right? Longer term, you accumulate a position right here and trade to the downside. Usually when you're trading DXY to the downside, you have negative swaps. So it's not the same as trading it to the upside. You're trading it to the upside, you have appreciation, but then you also have positive swaps on top of that. With this one, if you're trading to the downside, you have appreciation, but then you have negative swaps. So does it wash out? Does it not? Does it make it worth it? Right? Those are the questions you have to ask. So when you're trading DXY to the downside, me personally, I take more of a defined timeline approach, right? I have take profit levels, stop loss levels, and I have a rough estimate as to like how long I want to be in a trade. For example, my dollar Swiss short position, I don't want to be in that thing for 3, 4, 5, 6 months. I don't, because if I get out of that thing break even, if something happens, then I'm still net negative. That's kind of my approach, or how I would think about it. So, and you know what? The tough part is like those bigger long-term opportunities, like in DXY, like if we find ourselves way over here, well, that takes time to get there. That takes a lot of time to get there. Like dollar yen is one example. I'm waiting for it. If I can get 155, 153, whatever, I'm waiting for it, right? I was hoping that it would get expedited if you were to get this Japan intervention to speed things up a little bit, but we didn't. So I'm just patiently waiting for like 155, 153, 152, and the deeper the better. But it is what it is. All right, let's see. Great buying zone on yen. Could we'll see. If we tap into this 200-day moving average and we hold firm, then maybe this is a V-shaped recovery. It also depends on US macro too. So if you were to tap into 200-day moving average on dollar yen and you start to see hotter inflation prints, you start to see a strong labor market, see strong growth, whatever the case may be, and just the US fundamentals start to tilt back into a strong direction, then yeah, this is a pretty good buy the dip opportunity with dollar yen, right? At that point, if you were to have strong labor data come in from here on out, on US, then that doesn't require them to be so quick to add on rate cuts if they need to save the labor market. So That's what's going on with dollar yen specifically. Can you check Aussie yen for me? I'm short at 112 and stop loss is at 115. Let's see, Aussie yen. 112, 115. Okay, so you're short here. Oops. You're short here. Stop is right here. I'm assuming you're targeting maybe like the 200-day or something like that. That's a 1-to-1 trade. If you have like small risk, right, then it is what it is. I mean, yeah, Aussie dollar is strong though. RBA went from neutral-ish to hawkish, so I would imagine that Aussie continues to rise up a little bit, but then you also have the yen, which they got kind of quiet. Like, are they going to intervene once again? Maybe not. I don't know. They're pretty quiet, so I kind of think that this can drift higher for a little bit, at least tapping back into 114. This area right here, I think it's probable. Morning, Marco. I think you're muted, my friend.
Out here getting ready to basically close the screen and just start the weekend. But you're just starting Friday.
wait, say that again.
So I'm here in Croatia, ready to close the screen and just start the weekend early. And I can see you're just at 8 a.m. just starting the day. You know, it's such a huge time difference.
Yeah, man, I'm just getting started. I am also
Yeah.
excited for the weekend. So
Awesome.
you doing
Any
anything
cool
cool? Are
plans?
you going back to build the house?
Yeah. I'm gonna go back to building. So that's not super exciting, but it's gonna be better than being here in the capital and just sweating my ass off.
Well, I'll probably just do some swimming, honestly. Nothing crazy or
Cool.
anything, but
In
yeah.
Texas.
Oh yeah. Oh, it's been hot, man. It's been real hot over here lately. It's been easy like 100s. Sun shining over here, but
Cool.
at least it's not that humid.
Cool. But
Houston
where do you
is
swim?
humid.
Uh-huh.
In my we have a pool.
Oh, amazing.
Cool.
Yeah. Cool. Okay. Well, that makes sense. I thought like Texas, the sea, it didn't make sense.
We actually do have like natural springs. Like there's one called Barden Creek or something like that, and it's like 60-degree water year round, no matter what. But that one
amazing.
you have to travel a little bit to get to those little pockets. But I'll just stay home today or this weekend.
Cool. Well, it's best to just go swimming during these market conditions. You know, like nothing much seems to be happening. And I remember from reading Jesse Livermore's book, The Reminiscences of a Stock Operator. By the way, I would say one of my favorite books on the topic of trading, and it ends with a bang, which is kind of makes the whole story much more exciting. The guy kills himself basically, but yeah, kind of depressing. But so in the book, he says there's a time to go long, a time to go short, and a time to go fishing. Well, if you're in the Forex markets, this is the time to go fishing because there's nothing much happening.
I love that. Yeah, definitely. Well, you know what, Mark? I will say in the Forex market, I did actually add a position, but again, it's been quiet. So I'm kind of hoping that things start to heat up here. I'm starting to see some signs of that. So let me just break it down here for you. DXY softening a little bit. We had retail sales come out poorly today. We have the inflation prints coming in cooler, job market data not looking the best. So with DXY here, we are at a on the lower time frames, you have a level of support here, but you have the main one, which I'm looking for, is that 200-day moving average. If you were to see a breakdown of those, then I want to be a short seller of, for example, dollar Swiss. So dollar Swiss here, I got into it yesterday. I put it into the Discord chat. So we actually appreciated it a little bit, but ultimately this level of resistance held quite nicely. And then you also have like this upward trend line here that I'm looking at as well. So you have a lot of things pointing for US bearish on the fundamental side of things. The technicals right here would be starting to set up if you do get the break retest and continuation lower. And Edgefinder, I think, is -7 bearish on it. So I like that. Euro dollar, I'm still in the trade. So it's starting to wake up a little bit, but nonetheless, still kind of like doing this, like same thing as DXY. So hopefully we get the breakout and then I can get taken out of this one. And that's about it on gold. I did re-enter on the pullback, Marco. So we pulled back into this level here. This was previous support. Was it aggressive? Probably, I would say. But I'm thinking like, you know, if there's lots of momentum in this market, then you have shallow pullbacks. But similar to the other one, I'm very open to getting entered at better positions, you know, like 4,200 or below would be a bigger discount. But with gold here, I'm gonna let it do its thing. If it continues to break structure and you know keep going, then I just trail this stop into ideally break even as soon as possible, and then I just kind of let it ride out.
And so I noticed that your 200 EMA on the daily, or sorry, this is the 4-hour. But on the daily, it's a bit different than mine. So you do a different calculation.
So yeah, you guys asked me that in the chart in the chat. So I just have let me click on this one. Input is the length
It's an SMA.
200 SMA on the close, and it stays on the daily time frame. So this is what it looks like for me on the daily. And then if you go to like a 1 hour, it still stays there. So I'm always looking at the 200. But let me look at yours. How different is it? Maybe I'm tripping and I've been operating on the wrong 200 days for a long time.
On my screen, we're actually above
You're above the 200.
200, yeah. But I use an EMA. I use the exponential. So this is it. So it's an EMA, and the length is 200. The smoothing is set to none. This is just the default settings. So on mine, we have climbed above the 200. That's why yours seemed kind of different to me. And but hey, maybe if it works for you, then that's all that matters.
Well, look, Marco, I just flipped it to EMA, and it's still there.
Still there. Maybe it's the. Can you go into the settings?
Let me put smoothing to 0.
I doesn't want to do a 0. Or does it?
Now it's gone. Figured.
Damn.
Yeah, I don't know.
I don't know. I think it may be the algorithm, you know, playing with us.
Yeah, EMA is still there. SMA is still there at the 200. Guys, you guys let me know.
The algorithm. So
But
something is playing with us.
Maybe my indicator is wrong because it should switch if I'm switching between them, but it's not. It's staying the same. So is mine like outdated? Maybe. No,
I think it's just the data source. Maybe so FTMO has a bit of a different data feed, like the FTMO ANDA compared to my data feed.
But like on DXY, let's test DXY. So DXY is independent TVC.
Yeah,
we're gonna go from SMA to EMA.
Okay, let's take a look.
No, nothing's happening.
Well, mine again looks a bit different.
Ron says his is above. Can you guys, I guess we have to troubleshoot this. When you guys put a 200-day moving average on gold, is it below or above price? Dude, it looks like now I'm questioning, have I been using the wrong, like, have I never been referencing the 200-day actually? Because I use it on the chart markups. I'm like, 200-day moving average is right here, dynamic support here, there. What if I'm like completely wrong? That would suck.
Just goes to show that like the exact number doesn't matter. It can be the 200, it can be the 220, it can be the 209. Like, it's just kind of a rough guide. But I think I'm actually in the wrong because
some say below, some say above. Noah, I understand what you're saying, and this is why on the settings I have it to the calculation is on the 1 day, and it stays there. It stays on the 1 day no matter what time frame I'm in. If so, I don't know.
Yeah, for me, the time frame is the chart. Let me try and set it to. Whoop. Let me try and set it to the 1 day. No, it's the same. Can you hear me?
Yeah.
Because something broke on my end. Yeah, it's the same. Like I've set it to the time frame 1 day, and it's the same. So I don't know. Something is different either on my end or on your end.
Kier says change it from 1 day to chart.
Yeah, it doesn't seem to make a difference though.
Well, if you do that, it'll just go to whatever chart you're on. So if I keep it on chart and I'm on the daily time frame, it will stay where it's at. And then if I go to a 4 hour, then it would be below. So let me show you this. Put me on there. Oops. Go ahead, Marco.
Let's put Alan. Whoop. Okay.
So when you put it on chart, then it just goes to the 200 on whatever chart you're on. So if I'm on the 4 hour, the 200 is there. If I'm on the 1 hour, it's going to be here. So the 200 on the 1 hour chart. If I do weekly, it's going to be somewhere, who knows where, all the way down here. So I like to, it's the 200-day moving average. So I go on the daily chart and I keep it static to the daily time frame. And that's just what I use. So I just keep it there. So no matter if I'm on if I go down to a 5-minute chart or 15-minute chart, whatever, I'm still looking at the 200-day on the daily chart.
That makes sense. That makes sense.
I don't know, dude. That's crazy. We've been operating on the two whole different 200 days. You know, I'm bullish. You're bearish. You're like, what the hell's going on? So
yeah, it looks like we're talking about like voodoo magic.
That's very interesting.
I mean, at the end of the day, the EMAs are just a rough guide. You can, as I mentioned, use pretty much any number, and your edge may go up a little bit by using the 200, but you know it's not going to be like a make or break situation. We need many different confluences to take a position. So it's just a rough guide to say if it's above or below the 200, because the saying is nothing good happens below the 200 EMA.
Mm-hmm.
So yeah,
and,
I would be super yeah, sorry, go ahead.
No, yeah, like for me, same thing. Like I'm not executing trades or anything off the 200, but like 200 days is like something that's universally looked at by like even hedge funds and stuff like that, like institutions. Like when it comes to technicals, like the 200 is well respected and looked at. So like I want to know what they're looking at, but if I'm looking at a whole different 200, then that's a problem. But
I think I know what it is. So go back to gold, go to the daily.
All right,
someone
gold.
in the comments mentioned it. Go to indicators, so the top,
right here,
and add a exponential moving average.
Moving average exponential?
One. Yep.
All right.
And then make it 200. That's the one that I'm using.
Okay, 200. Look at that. Smoothing. We're gonna keep that what? None?
Just default. Yep. Just default.
We'll just keep it none on the. I want to keep it on the daily chart. On the close. I'm gonna
just
make this.
Yeah. Keep everything the same.
Pink. Well, damn. I've been on the wrong.
So thank you in the comments.
Let me see. Does it change anything if I go to simple?
Thank you to someone who put it in the comments.
Well, guys, I've been operating under the wrong EMA for this whole time.
Well, no, if you were using the SMA, so if you're using the classic one, probably exponential is what less people use, I would guess. Like more people use the simple one and less people use the exponential. So maybe I need to switch to the simple, because institutions, like, they use the simple for sure. They don't use the exponential.
That's a huge divergence though. But if you are looking at the 200 EMA, then you tapped into it just now.
Yeah,
and you found some support there.
Mm-hmm. Mm-hmm. Mm-hmm.
Interesting. So interesting.
I thought about going long, but I would have liked a bit of a deeper retrace. So I don't think we hit 43. We may have hit 4,300, but just barely. I would have preferred sort of a, yeah, we didn't hit 4,300. I would have liked a bit of a rejection into that area, kind of a bigger wick. And to be honest, I'm not super happy to buy on a Friday, so I'd prefer to wait for the next week.
Yeah, on the future chart too, it's still not there. Yeah, I was like, you know what, it's a little bit of a participation trade, you know. But we'll see. Again, I'm very open to a continued pullback. But if this thing does have that momentum, then I go ahead and ride with it.
Yep.
Tiger says, the guy I interviewed yesterday said sometimes EMA is better, sometimes SMA is better. Depends on which one is getting the most action at any given time. Never thought of it that way. Yeah, me neither, man. And I didn't think there would be such a huge divergence between the two options. But I'm going to stick with the simple. That's just me.
It's probably actually a better option, if I'm being honest, because the whole point of the 200 is that the big players are looking at it, and they're looking at the simple. They're not looking at the exponential. So simple does make more sense. I'll probably switch to simple, if I'm being honest, because I use the exponential for my stock picks for the 10, 20, and 50. That's why I kind of slapped on the 200 EMA, and it seemed a bit more modern, you know, like SMA to me seemed like for dinosaurs. The EMA.
Thank you, Marco. Thank you, man.
Well, he worked at a bank, so it makes sense. But for the EMA, it's kind of a bit modern, so that's why I picked it.
It's more Gen Z.
More Gen Z, yeah.
Gotcha. Well, let's see. Okay, enough EMA talks or moving average talks. That was a very interesting finding that we just came across. I'm glad
we found the solution. You know, we were pretty effective. It took us only 15 minutes, but like we're good at troubleshooting, I would say.
If I had Claude with me, I would have had it done in 2 seconds, man.
Yeah, yeah, absolutely. You know what I did? So I traded the CPI this Wednesday. I traded the CPI print, and just to explain to the traders. So to find out the move that the regular CPI makes, I went into Google Gemini, which Claude is a bit better, but I was a bit short in time. So I went into Google Gemini and I told Google Gemini, list all of the last 12 CPI prints, and then find the average move in pips on the Aussie dollar. And it listed all of the 12 dates, times, and prints, and found the average move, which was around 40 pips. So then I could expect, if I'm going to take a position on Aussie dollar right before the CPI, I can expect a 40 pip move. So you can structure your stop loss and take profit according to those parameters. And I did it in 3 minutes, 4 minutes. Before, it would take me probably 3 to 4 hours. So the game has changed, and you either use AI or you get left behind. That's basically the case.
Seriously, man, like so many cases of that have I used it, and it's so crazy how quick you can get that information too. I mean, you said you did it in 2 to 3 minutes.
Yep.
Can you imagine like the hedge funds that have a ocean of data at their disposal, and now they can just do very quick data refinement or just looking at it through with AI and just see like, you know, find me a pocket here or there, or find me something, an inefficiency. Like that's insane. But like to Marco's point, like use it or get left behind.
It's scary. It's scary because that's our competition, and the competition just got 10 times more advanced. Yes, we got a massive advantage as well, but the smart guys just got a whole lot smarter. So it's scary. It's scary.
And that's why I think from a retail trader, the way you can compete on a somewhat equal level is through swing trading, position trading, and trading macro, because you get the same data that they get around the same time. Do they get it milliseconds faster, sure, but you get it around the same time.
Mhm.
And you can make the same assumption and the same conclusion based off of that data. When you go to like a shorter time frame, you are competing against fiber optic cables. You're competing against algorithms that have millions of dollars of overhead a month just to stay alive. Like, you
ICT,
are
right?
competing with that, right? So
Yep.
when you go short time frame, I don't care if you have a book map on, that book map thing, or level or market data, depth of market, whatever. Good luck, because you're not on the same frequency as them. They are way ahead. They like, when it comes to the stock market and stuff like that, there's an exchange in New York, and there's one even further in Jersey or whatever. Like, they can get to that order way faster, get it back to
Mhm.
them way faster than you just see it pop up on your screen. So it is insane. And when you kind of zoom out a little bit and look at the bigger picture and look at the macro, you are seeing the same thing that they see.
Yep. So you guys heard it here first. The secret algorithm is real. Alan just confirmed it. The ICT algorithm, the smart money concepts, it's all being played in the background, and we basically have very little chance to make any money. No, that's a joke. But yeah, what Alan said, it makes a lot of sense. If you're closer to the servers, you're gonna get a millisecond advantage, and that's enough to make more money or make a profit at the end of the day. While we have an edge on the higher time frames, and the playing field just got leveled a bit because we get access to the pretty much the same numbers as the hedge funds, and now with Claude you get access to the same brain power or computing power as them as well, I would say, or pretty close. And also one more thing, since we're on the topic, there's a lot of edge in trading like the small caps in the US stock market, because the liquidity is so low. Like, the volume traded may only be 5 to 10 million per day, or let's say even less. The hedge funds can't play that. Like, getting in on a 20-30 million dollar position is going to be absolutely impossible on a small cap. So for us, we actually have an advantage the lower the volume, and the tougher it is for big money to get in.
That's actually very true. When you like increase your capital sizes, like, the strategies can't be applied universally. Like, if I'm trading a certain way in a low volume environment, a hedge fund cannot just trade the same way, because they'll move the market, and once they move the market, you got to have someone with equal size to get you out of it, right? And so who do you convince to buy it or sell or buy at a higher price, whatever? Like, it's way different. So the trade-off, though, is that because there's such low volume, the volatility is insane. Like, you can get crazy pops, but then you can also just be holding your money, and you can't exit the market. So
Yep.
yeah.
Yep.
But all right, Mark, I'm gonna go ahead and head out here. I'm gonna start my weekend.
Okay.
We'll go ahead and do that, and I wish you the best, man, and we'll talk next week.
Absolutely. So thank you, Alan. This was very fun, and I'm looking forward to Monday. So let's see what happens. Forex can it heat up a bit? I don't think so, but gold can heat up. So we'll see.
It's close to 1% today. We'll see if there's some follow through to that. But thank you, Marco, for the conversation, and we'll talk next week.
Absolutely. See you.
All right, man. Take it easy.
Okay. Let us continue. Let me take a look. Around 10 more minutes. Yen is moving. Nah, it's not moving. Aussie dollar is moving a little bit. So the dollar pairs are going up. The dollar is going down. Corn is not doing much. Oil is down. So that's interesting. The strait is still closed. So Hormuz or whatever the name is. If we go to the IMF port watch, the thing is still closed. Last update was August 9th, and yeah, nothing is passing through. But the shock to the market is minimal. I would expect a bigger reaction, a bigger shock to the markets. Has the stock market opened as well? Yes, it has. So let me see. Well, it doesn't look so great. Damn, I should close some RHI. VLO looks good. Dell. Let me see if we're getting any breakout that I can buy. Comp, no. Nah, we're not getting much. Okay. So the dollar is moving today. I mean, USD taking a hit today, BTC is down. That tells some things. I hope you're paying attention. Yeah, just really bad, really bad. You can look at the relative strength. So look at what gold did. Okay, gold had a breakout. By the way, let me set an alert. I need to close partials on VLO, and I'll forget. I'm a really forgetful person. Unless I set a reminder, I just forget stuff. Like, okay, let me set an alert. Close partials on RHI. I'll do it later today. Okay, so yesterday I had to run an errand. I was on my motorcycle, and basically I went out of the house, got on the bike, started riding, and noticed that I was half blind. And then I noticed that I completely forgot my glasses, these ones. So that's the type of a person that I am. I should probably have an alert for everything in my life. But what I was talking about is gold breaking out, stocks, all-time highs. So stocks look super healthy as well. Bitcoin, not so much. And dollar is down. So it makes sense that everything against the dollar goes up. Like stocks, like, well, even oil, but oil is a different situation. So stocks, crypto, gold, silver, platinum, copper, currencies like the Aussie. So the relative weakness is telling. Okay, it's telling. Sluggy says, what bike? It is a Yamaha MT-07. Simo says, scooter or a bike? No, it's not a scooter. I'm not a lady. It's this one. Just a bit older with the old headlight. Yeah, it's basically like 700 cc's and 70 horsepower. So it's a medium bike. It's a bit too small for me because I'm a bit tall. The next one should be a bit bigger. So we will see. Thank you, Simo. Yeah, it is pretty fun. It's pretty fun. It's like a medium term or a medium-sized Japanese bike for like little Japanese people. So I need to get a bigger one. Maybe the leader bike version. But not to get too off track, that's for a different channel. This is pretty bad. I think we need to wash away Michael Saylor. I think we need to wash away MicroStrategy because they have survived. They're still operating. Let me also check MSTR. Is that micro? Yeah. So this thing is still alive, which probably shouldn't be the case. We need to wash away all of the bad actors. We need to wash away all of the Ponzi schemes, all of the scammers out of the crypto space. And then we can start a potential new bullish cycle. So I would say we hit 40K. That would be healthy. And if you look at the current correction from the peak to the trough, 54%. That's not that big. You need 70 to 80% to really reset a move on crypto. If you look at the last couple of pullbacks, 70, 80% was the number. Okay. Aggressive bike. Yeah, I would like a bigger one. The MT-10, that's a good one. 700 cc is good enough if the chassis is light. It is, but it's too small for me. Amazing starter bike. What's your next bike? Probably a leader bike or a Harley Davidson, but a Harley Davidson is way too expensive. So probably like a leader bike from Yamaha or Suzuki. Marco, I'm trying to wash Sailor away with my massive short on Bitcoin. Well, good luck with that. I would love to see. I mean, Preying on someone's downfall is never a good thing, but you need to wash away the bad actors. You need to wash away the scammers, and what he is doing is a complete Ponzi scheme, in my opinion. And the way he's advertising it, like you can't lose money, that's like Enron and the Bernie Madoff Ponzi scheme, one-on-one. Gold, H2R, that's a good option. H2R, that would be a really good one. Full margin on gold and get a Harley. Okay. I'm looking for a position, but I'm not looking to go super crazy. I'm not looking to go with a lot of risk. But yeah, maybe I should. I don't know. Of course I shouldn't. I want to mention before I pass the stream to Tiger, if you want to get funded, Ola Prime. So Ola Prime, 20% off A1 Live. Look at their Trustpilot. Read through the reviews. Look at the ratio of 5-star to 1-star. Compare Ola Prime Trustpilot to FTMO, to DNA Funded, to 5%ers, to, I don't know, whichever prop firm you can think of. This one is really, really good. Okay, we have a couple of members in the A1 Discord who have gotten steady payouts. They're happy with their experience. And what I really like is there is no consistency rule. No consistency rule, which for swing trading is a very, very important rule. That can really screw up your whole strategy. So take a look. Link is in the comments. Link is in the description. Link is on the screen. QR code and 20% off A1 Live. That's the last stream for me for the week. I wish you guys to get some rest over the weekend, to get back on Monday fully rested and ready for another week. As far as my positioning goes, quick summary. I am short on Swiss yen. I'm looking to buy Aussie dollar. I'm looking for a bigger pullback on gold, and then I'll buy. I'm playing stock breakouts. Okay, that's it. Thank you for watching, and see you in the next one. Goodbye.
Don't go anywhere, traders. The show will be right back with our next show host. But before we get back to the show, I wanted to mention today's live stream sponsor, Ola Prime. Ola Prime is one of the fastest growing prop firms that I've seen in the space, and they offer a super wide range of different account types. Whether you trade Forex or futures, whether you're a swing trader or you're a day trader, they have multiple different account types, and they have some of the most competitive pricing that I've seen in the industry. And check out this publication from Deloitte, who did an audit during a select period of time on Ola Prime and its payout legitimacy. One of the big things that Ola Prime is well known for is their very fast payouts. They have this posted up all over their website as one of their main reasons that traders like them. From what we've seen, they also have a very strong reputation overall within the trading space, and they are a proud sponsor of our everyday trading stream here. And for a limited time, if you use our promo code that you can see on the screen right now, A1 Trading, you can get 20% off any of their accounts. And using our discount code lowers the barrier to entry, meaning that your challenge costs you less and gets you that much closer to potentially getting a payout someday. Of course, to throw my 2 cents in there, I'm a big fan of not trying to get funded until you feel you are actually ready to do so. So if you feel you have the skills, if you feel that your trading is up to par, and you do your due diligence on Ola Prime to see if it's right for you, then make sure use our promo code to get that extra discount at checkout, and we'll be dropping the link to them down below in the live stream chat. You can also find it in the description, and we'll have a QR code on the screen right now that you can scan if that's easier for you as well. So thank you to Ola Prime for sponsoring today's live stream. Now back to the next show.
What's going on, everybody? Happy Friday. We made it to yet another end of the week. Hope you're all doing well out there. As always, let me know what you're looking at. Throw out those tickers. Yeah, we did have some retail sales numbers come out just a little while ago. Further dropping the dollar, guys. It's further depreciating. So we did have that miss of a minus 0.6% against the forecast of 0.1%. So they only projected a 0.1% drop, but in fact, it went down by 0.6%. So not a great look for the dollar. If you take a look over here, we did drop from 20% down to 18% because of that, because the previous reading was a neutral reading that was nailed right on the dot the last period. So that is just further drops for the buck. Buck's not looking great when it comes to the data. it's trying to move back into the basement with the Japanese yen as we speak. Didn't quite get there, but it's close enough in my opinion. So they're pretty well partying it up there. Kiwi remains at the top of the list. Is my sound okay, by the way, guys? Let me know. I got a brand new webcam, a 4K webcam, which I don't have it on yet, and I got a brand new microphone, really cool, really expensive microphone. So I'm trying to make my sound and view and everything a little better. I tested it out yesterday, but then when I went out of it and put everything back to default, my sound wasn't working. So I just wanted to make sure that you guys can hear me okay. Yeah, that's kind of my project over the weekend, is to get all that synced up for some other projects my company's helping or wanting me to help them with for some reviews and things of that nature. So anyway, yeah, just go ahead and toss out your items there. And for that, we will skip on over here, have a look at the top setups. Gold, silver still remain at the top. Pound dollar, pound yen, still leading the way. So I did just go mess around with some alerts just a little bit ago. Was looking at some short-term stuff. It's Friday. I don't really like getting into the higher time frame trades like I prefer the daily 4 hours. So often on a Friday, if I have a little bit lighter of a day like I do today, I'll just go drop down into start looking for some 1 hour zones and just to see if we get anything come close to it for the day. So for example, pound CAD, I did have one pop up here. It's just more of a short term, quick turnaround play, if you will. But I really like this setup on pound CAD, because if we take a look over here on the right, we've obviously been having quite a few days in a row of declines for pound CAD. EMAs have flipped. 8 EMA is comfortably below the 21 EMA. So from a technical standpoint, from a trend standpoint, that does give me the permission I need to look for a possible short. And when I go back over here to my left and I'm on my 1 hour chart, what I identified was a really nice 1 hour supply zone right here, which is just ahead of the 200 EMA. And look at all the times. I know the guys were talking about moving averages a little bit ago. Look how many times the EMA was successful over here. Okay, we had the bounce right here off the 200, had the bounce here, had the bounce here, had the wick here. The point is, it's respecting it for this period of time. So yeah, that was why I actually put that in the chat earlier, because sometimes SMAs get respected more and sometimes EMAs get respected more. It's just kind of dependent on the crowd. If you stop and think about it, crowds of a feather flock together. And oftentimes when people see these little patterns like this, well, that's another reason to look at possibly taking a trade on that EMA. So you guys know me well enough by now to know that I don't take a trade just because it hits an EMA or a SMA or anything of that nature. I have to see supply. So for me, the supply, that's just perfect. I mean, that's a perfect looking setup when we're just isolating the technicals here for a second on the smaller time frames, right? The higher time frames, the daily, the 4 hour, well, that's where I really want to be 100% congruent with the top setups, because I'm likely in those trades for a few days or maybe even a couple weeks on the longer end. So definitely want to stick with that. On some of these shorter time frames, I'm just looking for a quick turnaround. So, for this matter, for this case, all I'm looking for is just to get a little push up there into that supply that did break some structures and just take a simple short on this thing. So as always, not financial advice, but this is what I'm looking at for a possibility for the day. And if it turns into a weekend thing, yeah, I'm not going to allow it to do that, first of all, because pound CAD, I mean, if you think about it, it's only about even if we bounce and get a push down, well, that's still, we'll just call it 790. We'll call it, that's probably not enough pips comfort for me to stay into it. So long story short, I just basically need a pretty quick spike up, pretty quick spike down, take a few bucks from it. If we're looking at demand zones on the bottom where to possibly take profit, well, it's giving me a really nice 1 hour zone right here. So at maximum, I'd be looking to take profits right here. Okay. And if this waits till Monday, that's fine too, or even Sunday evening. But this, just looking at a little bit smaller time frame, really liking this setup. Okay, really liking that, just for a quick turnaround. So that was the pound CAD. I think euro pound, I found another. Yeah, so on euro pound, kind of getting a similar picture. Okay, go back to the daily. You can see my 8 EMA is creeping below the bottom. Now, we did bounce into some demand, so that's obviously a point of care I would want to take into consideration looking back over here. I feel okay about it though, just because this leg out was kind of small. It wasn't very strong. The gap that it left wasn't like it was screaming strong by any means. It's kind of narrow. And then most importantly, the leg out volume was not that much. So that's why I would be willing to take a little bit of a chance on this particular trade. And if I just go back to just the 1 hour chart by itself, let's see, 4 hour, I need to go to 1 hour. Yeah, here's our 1 hour look. So hiding over here, which we didn't see on a 4 hour, is a 1 hour supply. I like this supply because we had our really skinny doji candle. It did close closer to the bottom of the range. And then we had 3 big candles out with increasing yellow candles on our VSA. So that's another spot I'm looking at. It's also going to be above the 200, which is a picture I like to see. I do like to see price pierce the 200 and go a little higher. That's my taste on this. So yeah, going to look to see if we can't squeeze out a few pips on that sucker as well, whether that's today or, again, Sunday evening, Monday morning, whatever the case is. We'll just kind of let her fly. And then I think the only other one I drew up was the pound dollar. This one's a little more realistic because pound dollar is obviously the #1 currency pair still on the top setups. And, oh, by the way, it got stronger. Plus 13. Okay. So really good. Really nice one. Over here, I think I did have that drawn as the 2 hour. Yeah, still the 2 hour. So still keeping an eye on this one down here, guys. Pound dollar. Legs out. Give me a really nice yellow VSA candle. So I like that. Price pierced through the overhead supply, showing a sign of underlying strength somewhere in this move. This just happened to be the last place it rebased, so reconsolidated before getting that second push up, which ultimately pushed through the zone. So I feel like that we could probably have some pretty decent underlying strength here. Not only the super strong gap that you see there, but again, the VSA candles started giving us above average volume, which typically signals smart money piling in. So that's going to be my favorite. Again, that's 2 hour, 1 hour, same thing. It's going to have to pierce the 200. And most importantly on this execution time frame, guys, which I don't really mention a ton, but the 50 EMA, which is my faster one, has to be above the 200. And currently, as you can see, it is. So that's just a few, like I said, smaller time frame trade ideas that I'm looking at between today, Sunday, and Monday. So that's probably, that covers that. Let's see what you guys got up here. Come on, holla at me. Holla at your boy. I'm wearing my Tennessee Titans shirt today. They won a preseason game, and I know that sounds silly, but hey, when you only win 3 games in the regular season, the prior game, I'll celebrate any type of win. Okay? Any type of win. So I got to represent my guys. I know that may sound silly and cheesy, but hey, a win is a win is a win is a win. Pretty good game. Let's see what you guys got. MLCCs. Let's see, where did I leave off up here? Oh, it's a mess. I can't remember. I've been watching. You've been watching a lot. MLCCs, glass substrates. Oh my gosh, that's a lot of big words. I see silica. I see gearboxes. AU. Okay, you want to see some Aussie US dollar, Jeremy? Yeah, absolutely. Let's go do that right now. Yen being bought again by the Bank of Japan, says Declan Laird, to move market today. However, I'm now in a sell on what is that, euro dollar? Euro dollar. Okay, so we can look at euro dollar as well. Dollar yen score. Yeah, dollar yen doesn't have a score. It's pretty well neutral, I think. I don't think it's changed on us. Yeah, here we go, guys. So if we're looking at the exact score, though, I always set my compact scores to neutral only. That way I can kind of go dig a little at a quicker view. It should be down here somewhere, -2. So, well, yeah, technical sentiment looks like we're getting the bulk of the minus on here, the bulk of the bearish look. But technically, you still have a tiny bit of bullishness on the dollar, which the yen is the only one that the dollar is technically stronger than when it comes to the data, because we just saw that the yen is the one in the basement. So a little bit of mixed data over here. That's why we're not getting any bearish looks, because it's pairing it with the weakest currency out there when it comes to the data. So that's why we've got just about every major currency pair on there except the buck, except dollar yen, I should say specifically. So, all right, let's go get the chart up and look firstly at Aussie dollar, since that's what Jeremy requested. Aussie dollar, of course, just stepping back, we're getting a +9 over here on the top setups. We broke and closed above the supply zone. I know I mentioned that yesterday. My daily should be giving us a good look. Okay, EMAs are pointing to the heavens. That's the alligator's mouth looking up. I like that. Going back over here to my execution time frame. See, I did draw up this one demand down here. What's a 1 hour giving me over here? 1 hour, 50 EMAs above the 200, so that's good. Same thing with the 4 hour. So my execution time frame moving averages are looking good too. Everything's great. Just need to find a place for a pullback, right? There's breakout traders up here, no doubt, that are trying to buy just because we're breaking out. But remember, that's oftentimes where they get swept. Right? They start feeling good. The smart money sucks in the longs and then they smoke them, right? It's not my term, it's their term. But for me, I would be wanting to find some type of play like this now that we've broken these structures. Have anything that looks like a decent demand? Let's go to some smaller time frames for you. Find out. Okay, clear down here. We did have this spot. Looks like that might have gotten mitigated already. Let's go draw that in real quick. Did that touch? Did that touch right there? I don't know. Look, it looks close. Yeah, we did touch it. So see, that zone already worked out. It's already been used just because of that little bitty wick right there. So for me, as a one use only zone trader on a 4 hour, that's it. It's been used up. Now you could get deeper. You could probably drop to a 2 hour, a 1 hour. Well, you don't even have a play over here because even if you look at this 1 hour, well, what did we have on this 1 hour? We had a 1 hour demand right here. Push up, retrace. What happens? Drop into the zone. Liquidity starts to spike, and then you get a push up. So even on a 1 hour, we don't have a play there. 4 hour, 2 hour, 1 hour, that's pretty well used up. If we want to get really silly and start dropping even deeper time frames, yeah, see, you could by definition draw this up as that's a 15-minute, but I don't like the fact that this wick did not come down to here, right? If this would have been a zone to watch, which it ain't, but if it would have been, it would have had to have at least been the same length as the wick right after. Let's get even crazier. 5 minutes. Yeah, 5 minutes. I don't like this picture at all. So there's nothing there. For a while, there was the 4 hour, the 1 hour, but it already got mitigated, already got used up. So no play for me in that area down here. What about right here? Not really the greatest volume, and we're looking at 4 hours. Let's go take okay, here's our 4 hour look. Yeah, I don't like this. No volume on these legs out right here, just average volume. I don't like to do anything average. 1 hour, yeah, not enough of a gap. Not excited about that. 30-minute, nah, mitigated. 15-minute, yeah, nothing. There's nothing there. There's just nothing there. It basically needs to recreate a new zone of some type. Otherwise, we drop to some zones that I told you didn't have any liquidity, didn't have a lot of leg out volume. Remember, this was the one on a 30-minute from Friday's Friday's NFP report that gave us the volume, and it's already been touched and mitigated. So basically, I say all that to say, I don't like anything up here because it's either been mitigated already, it's already worked out, or there's just not enough volume on those legs out of those consolidation zones. So I know it's a broken record, but I'm still waiting on that zone on top of a zone clear at the bottom. Unless it creates a new zone somewhere in this area, right? It's going to have to do some work for me. You got overhead resistance just ahead, some supply zone confluences up there. Yeah, there's just nothing for Aussie dollar, according to my strategy. Now, again, you're going to have breakout traders here, no doubt. So even, for the fib traders out there, I wouldn't recommend going too small of a time frame, but you could throw a swing low up here. I wouldn't recommend this because it's a lot noisier down here. There you go. If you get that breakout, which you already have, well, that's where you could look at a 50 or a 61%. That zone I just showed you on the smaller time frames that didn't have a whole lot of liquidity, a whole lot of anything going for it, is right at that 61.8. So if you wanted to thread some split some hairs here, well, you got at least one set of confluences. You do have a demand zone in structure. You do have a 61.8 fib retracement. But again, I just didn't like the volume picture. That's really my holdup. Plus, there's no real gaps. The 30, the 15, we've already went down this list. There is a little bit of a gap here, but there's too many 15-minute candles to the left. Right? This could be a 15-minute demand. It did leave us a gap. I think that's aggressive, but it is a possible setup. Now, the 200 EMA is too low. So if it were to drop down right now, well, we're ahead of the 200, and I don't like that. I would have wanted the 200 EMA to be somewhere up here, right? But it's not. So, yeah, I just don't like it. Sorry. I tried to split some hairs for you and thread the needle to find something, but I don't. At the end of the day, I don't necessarily want to say a low quality trade that I would never put my money on, right? So I'll just be honest with you and transparent. I don't see anything for my strategy. When I'm looking at supply, demand, the imbalances in orders, effort, match, and result, in this case, it really didn't, and seeing strong gaps to show that demand heavily exceeded supply. So I just don't see it. Gold. Oh my, let me. Okay, so I've got 11 minutes. Got my alarm set, so I won't. Yeah, dollar. Yeah, so I mentioned that. Pound New Zealand, Oder Anosike. I like that. I like to try to get people's names right. So if I ever butcher your names, just know that I'm really big on names and pronunciation. So if I ever screw it up, tell me. Just tell me. I'll get it right. All right, Pound Kiwi. I see that one up there. As always, I start with my daily on the right. So we had a very strong push down. We have since had a retracement. Now, my EMA is still technically, talk about the 8, the fast one, the fast EMA, okay, the faster one. It is still technically below the slower EMA, which is the 21, but it looks like it's trying to push up. Now, we have broken through this overhead structure. Let's see, over here on the right, or on the left, rather, it would be this 4-hour supply. So it's looking good for the turnaround. I just need to see a little bit more follow through. Might be a little aggressive trying to buy into a zone like this one right here, especially with being no volume on the leg out. That's the intraday switch, or between day intraday changeover, if you will, for that leg out. So I don't like that at all. There's usually no volume at that point. Okay. Tiny bits, but not enough to get me excited. So I'm going to have to see another structural break. Why do I have that candle there? Yeah. If you're asking my honest opinion, I need to see another structural break, retracement, find a newly created demand zone and a newly created impulse move, bullish impulse move for possible buy. So it would look something like this. Just don't know the exact look yet because, well, it's not formed. Right? Find a new demand zone, something like that. But the point is, let's break this structure, right? Structural break, impulse move, find the source of the strength of that impulse move, wait for a retracement to get a better discount, find those unfilled orders, get the bounce, bullish impulse leg, candle with a wick underneath, volume spread analysis activity, picking up on the way out, and then we could go for a long. Probably going to be some better assets than Pound Kiwi, in my opinion. Gold, I see gold up there a couple times, so let's go to gold. Obviously, that is the strongest asset on the list, right there with the pound dollar, plus 13. Everything's looking good. Dollar data has been missing lately. We had another further miss today on the retail sales. We had cooler PPI yesterday. We had cooler CPI on Wednesday. We had a miss on last Friday's NFP. So, guys, we just had the dollar just plummeting when it comes to the data. So, as a reciprocated reaction or result, gold has been improving its data. I mean, you know, especially if we go over here to the asset scorecard. Let's go take a look at it. What is lacking? The only thing really lacking on gold is the bullish PMI data we had for the states here, as well as the unemployment rate as far as the percentage. That's it. That's the only two items going against the bearish narrative. Look at the scoring. From June 30th, we had our low. What happened on July 1st? Was it July 1st or July 2nd? That's where that first set of bad data came out for the dollar. I think it was the service PMI, or maybe it was the manufacturing PMI, and the one of the labor data sets. That's too long ago, guys. Can't remember. But how interesting is it that the minute the U.S. data started going south, the scoring on gold and silver, for that matter, went from very bearish to a rather strong grind up to now very bullish. You guys see how that correlation is? All throughout here, we had just terrible data, terrible dollar data, and cooling inflation, which we won't complain about that here in the States. But if a picture's worth 1,000 words, there's your picture. As the U.S. data starts to suck, right? We start having a little bit of geopolitical in there. There was a little bit of ceasefire that, it was a little bit quieter than it had been since the thick of the war with all the bombs being dropped. A lot of cussing and discussing with the ceasefire, the blockade, and trying to figure out a peace deal, which we're still without right now. But it just goes to show you how fast something can move when the economic calendar turns south or gets really, really good for an asset. So anyway, plus 13, looking really good. We bounced into that overhead supply, what was that, Wednesday. And I'm just waiting on a discount, guys. I know I've talked about this a lot. Still waiting on this 2-hour zone of demand all the way down here. Now, my only question for this 2-hour zone at this point is, has price moved too far away since I created that? See, I drew this up when price was relatively in this area somewhere, because I was hoping, what I was hoping for back in this part was for a quick retracement. Now, since then, price has continued pushing up, rebase, push up again, rebase. And now at this point, it's going to basically become its own little mini downtrend. So does it feel like that might be a little bit of a catching a falling knife? A little bit more, yeah, it feels like it. Now, my moving averages are still okay. 4-hour there, 2-hour there. The 50 rather is still above the 200. Even on the 1-hour, okay, it's still up. But by the time price gets down here, well, now my moving averages are probably going to go out of whack. A little bit of a death cross to the bearish side. I may not be as interested. So what would make it better? I think just breaking through the rest of the supply and rebasing like I drew on this green projection candle, projection line. I think that's ultimately what I'd rather see, just a breakthrough, close, rebase. Maybe this right here turns into a zone. I don't know. But yeah, even though it's the most bullish asset, I haven't quite found a place to buy into yet, guys. This zone here, remember, didn't have a lot of volume when I showed it to you guys yesterday. So that's why I'm not too excited about this. Plus on a 1-hour, there's not really any strong gaps out. So yeah, when it comes down to the 2-hour demand I drew up, though, remember, I have to see this picture to an absolute T. I have to see price bounce. I have to see the broken structure and then find the source of that power. Maybe we could take a trade at that point. I am not going to limit order this. I can promise you that. It's only about a $17, $18 range. Think about it, on a $4,100 instrument. $4,100, $4,200, well, $43 at the moment. So it's going to have to absolutely prove itself. And even then, I might even lay off on some of the risk. Might even take off some risk. So yeah, guys, I know it's the same boring answer every day, but until we break out of the overhead supply, until we retrace to a zone with pretty decent looking liquidity, I've got no interest on it. Silver. Let's see. I was looking at something with silver earlier. What did I draw up here? Was that a 4-hour I drew up? Yeah, I drew this 4-hour up yesterday. Pierced in. Okay, so yeah, that's old news too. I mean, that was an old zone that got touched, and 2-to-1 profit on that. But it's just scary for me, as always, to be buying just while I'm practically inside of a demand of a overhead supply zone. So just goes to show these zones do work, despite all the landmines that I see on some of these zones at times. So, okay, what else we got up here? Gold's over with. Edge Finder, Gold Edge Finder score is 12. You might refresh it because I just refreshed it, and that's what it gave. But either way, we're splitting hairs at this point. 12, 13. Yeah, still showing 13 now. Showing 13 because it updated, because the dollar just had that bearish retail sales number, right? So that gave it a little bit of strength. No volatility, boring market. Yeah, unless your name is Japanese yen, right? You guys remember the yen is just all over the place. I still need that ATR. Speaking of dollar yen, somebody was asking about it. I still need the ATR to come back to somewhat normal. Now, it's been all over the place in all fairness, but I'm referring to basically since the U.S. data started going south. Middle part of June, the whole month of July, we were based out around that 75, 65 pip a day range. And then all of a sudden, we're almost double that. Right? So I like volatility. I just don't like that much volatility. I want it to come back and behave like it normally behaves. And so far, it's just all over the place. 484 pip decline last week from that intervention. Obviously, President Trump, Scott Bessent, Secretary Bessent, the finance secretary, talking about intervening with the Bank of Japan to help them out on their yen. It's just all over the place. What else you guys got? Pound Swiss. Did we go over that? I don't think we did. Pound Swiss. Pound Swiss for Philosopher Farmer. Yeah, let's take a look. So EMAs are up. I love the trend on this thing on the right. Now I go back over here. 4-hour chart. We had that equilibrium. Remember? We talked about this example. So we've had a liquidity push up. Now I'm looking for a liquidity push down to take out all this. All this nonsense right here. All this sell orders. There goes my alert. All those alert. All these sell. Sorry, I colored it wrong. All these sell orders. All these stop losses. Take out the stop losses. Now that we've swept the liquidity, the only thing left to do is go sweep the other side and get a discount because we've got to buy on this, correct? This is giving us the bullish look. Yeah, +8. Yeah, this is the only thing that's left. We've broken up here. Now let's pass through and see if we can escape the black hole of the equilibrium again. It could just very well get sucked into there and just go sideways from that point again. But if it does slip through, that's a really good look. Taking liquidity, taking unfilled orders from this 2-hour zone of demand right here. Lovely volume on the way out. Push up, break of this structure right here, and the price just kept going. So that's going to remain my favorite setup, guys, for Pound Swiss. Right here. That's the buy point. Same thing. Just like gold. This is just like gold. So if and when price returns, it's got to give me that very, very same pattern that I drew up here, guys. Bounce into the zone, break a structure, impulse move, find the source of the strength of that impulse move, which is strong because it takes a lot of money to break structure. Oftentimes, use the rule of fours, 4 divided by 4. So in this case, 2-hour divided by 4, which means 30 minutes. We go down to the 30 minutes. Go down to the 30 minutes and see if we can't find a 30-minute demand somewhere in this move. That's the rule of fours. It's a very common rule. I don't know if it's necessarily verbalized a lot, but very common rule. If you're looking at an intermediate time frame of whatever, well, as far as fine tuning it, just divide it by 4. And that's a pretty good separation from that intermediate time frame where for me, I find my zones, my supply demand zones, go down and refine it on the whatever the time frame is divided by 4. Look for another zone in that case to find some confluence. So there's a lot of confluence play, guys, with the way I trade. I know sometimes it could probably be overwhelming. I try to explain it simple, but sometimes I get carried away. So anyway, guys, that's the end of the show today. Have a wonderful day. Stay safe out there. And have a wonderful weekend with your family, your friends. Guys, please reset. It's very, very important to do that for the sake of sanity in this industry and your health. Go reset, go refresh, and then we'll come back strong on Monday. Fair enough? All right. Tighten up.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.